I know a lot of people don't think this, but it's very simple to find the number one top gainer of the day. We have all these scanners, we have all this equipment, we have FoxRunner, we have trade ideas, we have all those things that we already talked about what you guys need to be able to start off each morning. But the thing that's more difficult is actually figuring out a price point on where to enter a stock. When you figure out the price point of where to enter, that is going to lead towards you actually being successful. I cannot tell you how many times I have bought the number one top gainer of the day and somehow lost. A stock goes from $5 to $25, but maybe I got filled when the stock went from $5 to $10, got filled, it fell back down to $8, I get out of the play, next thing you know, it's all the way up to $20. And I know a lot of traders can relate to this, somehow getting in at the wrong time, and it seems like every time we do get in, the stock reverses on us. So how can we avoid that? How can we have great entries? Now, an entry of a stock, very simple, is just going to be putting ourselves in on that play. We are taking our hard-earned money, buying shares of a stock, and now we are going to have partial ownership. Now, as we have partial ownership, depending on how that stock's performance is, we could either make money or we could lose money. Now, one of the most important things there are in stock trading on how to be able to figure out where a stock is going to be moving next. It is not about what is the best play of the day. As I said, that's very simple and easy to be able to discover. What you need to figure out is where are reversals going to happen. So everyone write that down. The secret to success is being able to figure out where a stock is going to reverse. If you can figure out reversals and you can become a master of where our stock's going to reverse, that is where you are going to have the most amount of success. Because guess what? I can figure out stock ABC is going on a big spike, but I need to figure out the greatest entry. Now, these entries are going to be support and resistance. I know we talked about this on our last lesson, going over what is support. Well, support is simply enough just an area where we are going to see bouncing. It's going to be a price point, which is almost like a platform. We're also going to see resistance. Resistance is going to be an area of rejection. It's almost like a roof. We can't get through it. It's through a ceiling that we cannot break above those certain price points. So let's start off with support. We are going to buy at the strongest support line we see after a spike. This could be past chart history pattern, natural support, or detailed support. We are buying at support because this is where we can increase our reward and minimize our risk. So, for instance, traders, if we are taking a look over on this chart and we are realizing that every single time it comes on down to this bottom blue line, we get a bounce play off of it, we could start putting together a pattern. Not only am I seeing that we are going to get a dip buy and bounce play off this bottom blue support line, but we also know that other traders throughout the world are also going to notice this pattern. So they're going to be placing entries. Remember when I told you that the stock market moves because people are buying and selling? It's companies buying and selling. It's hedge funds buying and selling. It's brokerages buying and selling. It's retail traders buying and selling. When we establish a support and resistance line, we are now going to be able to understand where should we buy at to be able to have the most amount of consistency. So we could take a look right here. And we can realize not only is support just a flat platform moving sideways from past chart history pattern, but we can also see that support is also going to be horizontal at times. We are going to be able to see trend lines. Now, the big issue with a lot of traders is they realize that we have these uptrends. But guess what they fall into? They fall into their emotions. They fall into FOMO, the fear of missing out. They constantly buy at wrong times. This is what I want to get through to your head right here and right now. The majority of traders will not buy a stock near support. They will buy a stock after it has already bounced on up, and now they have the visual confidence the stock is going up, so now it's a good time to buy it. That is absolutely incorrect in every single way. You do not want to wait for a stock to move itself on up. You do not want to wait for a stock to spike and rip and run. You do not want to wait for a stock to be able to spike up 100% before you get yourself involved in on that play. That is not going to be the time to be successful. As you guys can see right here, every single time the stock has spiked, if you missed out on the bounce play, you most likely got caught up in a drop. This is where you have to go against your human nature. Your human nature is do not buy a stock that is falling and fading. I completely understand that. But the falling and fading is when a stock becomes oversold, just like when we talked about on the RSI. A falling and fading stock is when we have a dip buy and a bargain price. A falling and fading stock is when we have the best opportunity to make money. If we buy stocks after it already has a 70 on the RSI, because this is when we're the most confident because we see that it has proven results, it usually means we are buying and someone else is selling their shares to us, which means we're paying out their profits. You have to reverse your mindset in stock trading. I am not telling you to just buy every single stock that's dead and it'll come back up at some point. That is not what I'm saying. But what I'm saying is if we see a good, strong, healthy company or a stock that's very hot on the day with a good press release, with a lot of good volume and volatility, and we have an uptrend, we can look for dip buys rather than being the person that feels like we have to buy at the highest point, hoping that it goes higher. So, we always want to be looking at our support and resistance lines. Now, these are the best entries that you could possibly ever have. Support is where you dip buy, support is where you enter, resistance is where you sell, or resistance is where you short. So if I wanted to get involved over on stock XYZ right here, we can realize where would be the best area to be able to dip buy this play. Get next to the blue line. Refuse to buy at highs. I will tell you, and I will even say for myself, I would always be a trader when I first started that wanted to look for the breakout, wanted to look for that big squeeze and that big spike. The majority of traders who do that will consistently lose. Buy at the blue line, short at the red line, take profits at the red line, cover your short at the blue line. It's a game of just back and forth, and once you establish the pattern, you are going to have success in this game. So, how do we know when to actually buy at the break of resistance? Because that's when we get the next leg on up. I will always say, look for the entries at support, and from there, you'll eventually get the break of resistance. But if you keep buying at resistance, you're going to have some trouble. Usually what you could see is it's going to be the third to fourth touch is when we have the break of resistance. The third or fourth touch is when enough buyers come back on in where we get that big time breakout run. So what we can see here is here's a very easy textbook example. The way that I always like to think about this is our first touch of resistance is going to be us establishing resistance. So when a stock XYZ runs on up to the price of $5, we hit $5, we establish $5. We fall back on down, we bounce off support, we run back on up. We enforce $5. Then the third time we come up and around, we break $5. It's not always true. It's not always this is the third or fourth time we're going to break out, but it's a nice little rule of thumb to help you just get a mindset of when we can see a breakout. Establish resistance, enforce resistance, break resistance. Sometimes it might be the third touch, sometimes it might be the fifth touch. But if you consistently keep hitting those highs, there is a great chance that you are going to be able to break out. Little side note, one of the greatest ways to know that a breakout's going to be coming is every single time that you do have a pullback, you have a higher low, showing that even when you are getting rejected, you're still taking a few steps forward. So a higher low is something that we are going to talk about, but it's something that you guys might just want to be thinking about right now to know when a stock is going to get a nice breakout. Now, what else can you guys see out of the image right here? You can also see that our old resistance where we had trouble getting above before is now turning into support. This is an area where we are going to get dip buys and bounce plays towards. So support and resistance is going to be consistently changing. Old resistance will hold up as support depending on where the price point is at. And this is how we can be able to be predictable in the stock market. So, what do you guys realize over on our charts as a little bit of an example right here? We might have the price of $5. $5, we hit as resistance, we fall back on down. We hit as resistance, we fall back on down. We break resistance, guess what? We run up towards our new resistance line. Let's say 750. 750's new resistance, guess what? $5 is now a great dip buy. Runs up to 750, $5 is now a great dip buy. Runs up to 750, $5 great dip buy. Guess what, guys? We now break 750. 750, guys, eventually we fall back down to 750. Guess what? This is our new dip buy. So another great example of just understanding how support and resistance is going to work hand in hand to always give us our best entries. Just like here, we can see $2. $2 holds on up, we fall back on down, nice bounce off that 50-day moving average. $2 holds on up, start building higher lows, stock starts getting tighter, here's the breakout. First touch, we establish $2 resistance. Second touch, we enforce $2 resistance. Third touch, we break and squeeze $2 resistance. The 1, 2, 3 punch right here. Same exact thing when we take a look over on this example. Top resistance, top resistance, top resistance, top resistance. Eventually, we break out of it. But you could see, this one didn't take 3 times. This one took about 4 to 5 times before it broke resistance. But the number one issue that a lot of new traders make is they're always buying here, looking for the breakout, but it cracks. Buying here, looking for the breakout, and it cracks. Very simple, very straightforward here, team. Where do you have a better chance of success? If you, again, buy here, you lost 1 time. You buy here, looking for the breakout, but it doesn't happen. You lose again. You buy here, you buy here. You lose again, you lose again. And then finally, let's say you buy here and you finally win. It took you 4 losses before you had 1 win. Why would we do that? When guess what? We could buy here, we win. We buy here, we win. We buy here, we win. Guess what, guys? We could even buy somewhere down here, we win. We can win so many more times just by buying at lower areas, buying where we have our dip buys. So do not get emotional. We want to make sure that we understand, of course, these charts and understand where we have the greatest odds. We have reward, not risk. Market conditions are everything, traders. Now, every single day, the market's going to give us different conditions. We are going to have hot days. We're going to have slow days. We're going to have days that we can make a lot of money. There's going to be days that we're not going to have as much volume. Like, for instance, right now in August, it's a little bit slower at times, isn't it? During August, we're not seeing as many big time breakouts. In August, we might have traders doing what? Enjoying the weather, hanging out with their families. People on Wall Street are in their Hamptons houses, hanging out at the beach, going on vacations. The thing is, we know that the hottest time of the year is going to be October, November, December. We know of very hot times, January, February, March. We need to know the hot times of the year when we can be putting big money in the market, expecting big returns, and maybe when we want to slow things on down. A great example would be skiing. If you are a skier or a snowboarder, you know everything about conditions. If you have great conditions or it's nice fluffy snow, you're going to have a great day. But what if you want to go skiing and snowboarding and it's 80 degrees out, there's no snow on the mountain, the chairlifts aren't open, but you really want to go skiing? Hey, have fun, enjoy it. You're going to have to hike up a mountain. You're going to be riding on grass and dirt. You're going to fall, hit a rock, right? It's like, you have no control. It's awful conditions. There's no snow. So sometimes we are going to have days that are not going to be as hot as other days. Sometimes we're going to have that absolutely perfect day where it seems like everything is breaking out. Please understand that the market conditions will change every day, and you want to be able to gauge that by seeing in pre-market how much is stocks moving. Are stocks up 100, 200, 300%? If they are, it's a very hot day already. If they are, we can expect to go ahead and attack plays with big volume and big action. But if we wake up and there's only a top gainer that's up 10%, 5%, nothing's moving, no hot news, well, we may want to slow down, take a little bit of a step back, and understand these are the conditions that we have on this day. Do not fight it, because guess what? You're one individual. You're one fish in a giant ocean. Your, again, $2,000 trade jumping in on a play isn't going to make anything rip and run. You have to go with the current of the ocean. Don't go against it. So, when can you look for these breaks of breakouts, right? We already talk about these breakouts. We talk about watching for these huge spikes and these rips and these runs. When can you have the best chance of buying at the break of resistance for that next leg? Well, hotter market conditions, weeks with multiple spikes, big news, big volume, higher lows, right? That's what we want to be able to see. We want to see higher lows. We want to wait for the third to fourth touch. We want to see a day that maybe stocks are up 200, 300, 400%. Everyone on social media is talking about that. So that's very important that we consistently buy at lows, of course, waiting for great opportunities to present itself. When do I buy at support? Always. You can always look for a dip buy at support. There's never an issue. There's never anything wrong with looking for a dip buy down low. And guess what? If it doesn't bounce, you are going to have a stop loss underneath your support line where you have such minimal risk. It's always worth at least trying to test it on out, right? So are there any other times to be able to enter plays? Well, Dick, we're talking about support and resistance so much. When is going to be the best times to be able to enter plays? And this is what we talk about learning the alphabet. We have A, B, C, and D. What are going to be the best times to be able to learn plays? This is where I do got to get a little creative right here, because I do want to be able to talk about right now, how can we be able to trade stocks? How can we be able to get in on the greatest entries? Well, you guys have already learned that we definitely want to be getting involved at these great price points. But I always look at plays and I always think about the alphabet. I think of A, B, C, and D. Now, what is that referring to? Let's say, again, we have a stock that does this. We have a stock that moves itself on up, hits, let's say, strong $5 resistance, falls back on down, and now is starting to move itself back on up. The alphabet in my eyes is going to be what? A. A is going to be establishing strong resistance. A is going to be the high of the day. A is going to be the price point that we want to be able to break through eventually. B is going to be the reversal. B is going to be fading and falling and dropping back on down. C is going to be right when the stock starts finding a little bit of that higher low. So C is going to be, hey, we just found support. We're now building that higher low. And then D is going to be when we get back up to resistance and we finally start getting a nice breakout. So let me ask you guys a question. When would we want to buy plays? When do we want to look to be able to get involved over on these stocks? The correct answers that we are looking for is if we are looking to go long, aka buy stocks on the upside, the best entry is always C, with the potential entry of D. Remember, we do not want to get caught up in the hype of buying a stock that is spiking and moving on up just to buy at the tippity top. We want A to establish where the high of the day is. We want A to establish where resistance is at, but we want to avoid buying at A. The only way that we would ever buy at A is if we're shorting, aka betting that the stock is going to fade and fall. Remember, watching to see if maybe the stock is going to form one big upper shadow right there, and maybe we can short it back on down. Then A would be fantastic. B is when we are going to look to find support. So as we get down to B, if we are shorting this play, this is where we probably want to cover our position because now we're coming on down to a support line. Now, Deck, when would we want to start actually going long? Well, going long would be once we start seeing a little bit of higher lows off support. Now, there will be many times, as I already stated, that we do get rejected off D. The best price to be able to get involved over on plays is going to be somewhere between C and, of course, as you're moving up towards around that D area to get the best overall cost basis or the best overall average. If we can have a great average before we actually get to D, that's going to help us save a lot of money. Let's say this, guys. Let's imagine this here for a second. Let's imagine that we are looking for a great entry. We believe that we are going to get a breakout coming on up. We believe the big time breakout's going to come on up. This is the third or fourth touch in the near future. Okay? What could I do? I could enter right next to C. I see that higher lows are starting to form. I see that the stock is moving on up. And let's say right now at this moment, I have 1,000 shares over on this play. I could enter at C. Once we get up to D, I again lock in 500 shares. Guess what? I just made profit. I am guaranteeing myself to make profit. I'm guaranteeing myself to be able to lock in some sort of gains. And you know what? If it does break out, well, then I got 500 shares that I can be able to continue to hold. But let's say the stock turns and starts falling. Well, then, ladies and gentlemen, guess what? I could get out here. I could get out here. And again, no matter what, I'm still making money because I already locked in that $500 profit. So traders, let's get to the next step of this. The next step of entries is going to be averaging. Averaging in, averaging out, understanding the right way to be able to enter a play correctly. Now, the thing is, team, you are going to want to be able to figure out, okay, how can I enter a stock? Let's talk about entering for dip buys here. Let's think about what is the best way to truly enter. Because let's imagine that a stock does this here, team. Let's imagine that a stock goes all the way from the price of $5, shoots all the way on up to the price of $15, and now the stock is coming back on down, and we believe the best dip buy opportunity is going to be around $10. Maybe it's the 200-day moving average. Maybe it's the old spiking high from a previous day. Maybe it's whatever it may be like that, right? So what we're looking at is we know that $10 is going to be a great support line. Traders, do we just put entries of, let's say, 1,000 shares at the price of $10? Is that what we do? The entry is no. Because there's going to be many times that if we put an entry right at the price of $10, guess what's going to happen? The stock is going to do this. Fall on down towards the price of $10.02, we don't get filled, and then it bounces back on up. There will be times the stock goes to $10, fades on down to $9.90, we get out of the play, we get scared, and then the stock moves on up. What is the best way to be able to have the most perfect entry possible? The best thing to be able to do here, traders, is to go ahead and put that imaginary box around $10. Imaginary box, traders, is going to give us 3 price points. It's going to give us the high price point, right? Here's the high price point. Here is, let's say, the average price point, and here is the low price point, okay? So if we believe that $10 is going to be a great support line, what we are going to want to do is surround $10, because in the stock market, nothing is perfect. The stock market is going to give us many different opportunities. It's going to give us many different chances of success. But what we need to understand here is nearly ever do we ever see a stock just come down to $10 and hit it perfectly. So what I need you guys to start working on is averaging in on trades. We know that we are avoiding buying at the $15 touch. We know we're waiting for the opportunity to be able to get filled as it comes back down to $10. But let's say to ourselves, hey, we know $10 is an excellent area. We know we might not get $10. So what can I do? First thing that I want you guys to be able to do is say, you know what? I'm going to go ahead. If I want a 1,000 share position, I'm going to do 250 shares around the price of, let's say, 10.12. Deck, why 10.12? Because the thing is, we're close to $10, but not exactly at $10. So I might say to myself, all right, that's close enough that if we fall on down to 10.12 and maybe it hits 10.10 and I can get 250 shares, at least I'm going to be getting something, and I'm going to be able to make some money as the stock moves itself on up, and that's going to be absolutely great for me. So it's basically just getting a little skin in the game. Now, the greatest thing about this is, let's say the stock does move itself back on down and we hit $10. Well, at $10, we are going to have another 250 shares. Now, at $10, we get filled. Now, if we have 250 shares that are filled at 10.12 and we have 250 shares that are filled at $10, this is going to be giving us a brand new cost basis. And what I mean by that is this is now going to give us a cost basis right around 10.06. So we also now have 500 shares. So we have a larger position, and since we got filled lower, we now only have to get to 10.06, not back up to 10.12. So before, if we just left 250 shares, it would have to get back up to 10.12 before we get back into the green. Now it only has to get above what area? 10.06 right here. And now everything above this is going to be green with more shares. So now we're making even more money. Well, Deck, what if again it does this? What if it falls all the way back on down towards the low point? Well, the low point, let's say this is going to be our last little bit. The low point is where I'd like to add the most amount of shares, aka let's say 500 shares. Why? Because this is actually at our support line or slightly underneath our support line, where we are expecting that we are going to get that dip buy. We are expecting that we are going to get that bounce play. And since this is the lowest point, this is where we believe it is the most oversold, which means that we would like to get the most amount of shares that we possibly can. We are going to get this now at the price of around, let's say, $9.92, where we believe that this is the low point. We're going to any moment start bouncing our way back on up. Now, if we have 500 shares at $9.92, our cost basis is no longer $10.06. We have 500 shares at $10.06. We have 500 shares at $9.92. What is our new cost basis? Our new cost basis is going to be somewhere right around probably $10, probably right around that, $10 mark. So now I have 1,000 shares at the price that we initially wanted, at the price of $10. And if we get that good dip buy and bounce play and we start making our way on up, ladies and gentlemen, we are going to have the best price. We are going to have the most amount of shares. We are going to be able to do it as safe as possible. And guess what? We are going to make the most amount of money possible. Right? And that is absolutely fantastic. That's absolutely great. Now, I know what's on every single trader's mind right now. Every single trader's mind is saying, well, Deck, what if you go underneath that low point? What if you go underneath H, A, and L? What if you go underneath every single one of these points? Well, right here is where you do have to have your stop loss. That's where you are going to end up taking your loss. That is where you're going to say to yourself, you know what? My game plan didn't work. You know what? My stop loss didn't work. But you know what I will show you right here? If you got filled with 1,000 shares and the stock goes from the price of $9.92 and bounces back up towards, let's say, $14, how much money are you going to make? You are going to be making nearly $4,000 on this trade. Okay? 1,000 shares from around $10 back on up to $14. That's again a $4 move with 1,000 shares. That's a $4,000 profit. What if the stock goes from 1,000 shares that we have, right, at the price of $10, and let's say we get out at the price of $9.80. We realize that this isn't working, and it hits $9.80. $10 to $9.80. How much would we lose? $200. So you're telling me if I jump in on this play using this strategy, yes, you can 100% lose. There's no way around that. You can 100% lose. But at the same time, guess what? If you win, you're making $4,000. So this is essentially what we are bringing up in every single one of these chart setups here. You know, when we go over and we're taking a look at, okay, hey, take a look at this, guys, right? What do we have? Bounce play, bounce play, bounce play. These are great chances for us to be able to have success. This is where we can go ahead and use that imaginary strategy, right? Look at, again, this support line. This is old $5. We surround $5 right here. Imaginary box, imaginary box, imaginary box. And you guys can see, you know, when we go ahead and we take a look at this, there are sometimes little lower shadows right underneath that area, right? That happens. There are sometimes that we do see plays go a little bit lower than what we expect, and that's okay. So all we're looking for is to surround that support line, give us a chance that are going to put the greatest odds in our favor. Now, let's imagine we want to short a play, right? A stock goes on a spike and we want to reverse it back on down. It's the same exact thing. Put the imaginary box up high at resistance. Go ahead, watch that reversal back on down. Let's see if we can start fading and falling. So when we're looking for entries of a play, when we're buying, we're looking down low. We're trying to increase our odds. We're trying to give us the most reward and minimize our risk. When we're shorting a stock, betting against it, we are looking to be able to use that imaginary box at resistance, past chart history areas. Where did we see old spiking highs? Where were previous old upper shadows that we could fade and fall? Remember, we're looking to be able to increase our reward, minimize our risk. That's what it all comes on down to in stock trading, so that we can have the best chance of success, and that's when we can be able to make the most amount of money. Now, this basically ties right into our next little idea, which is going to be having a trading plan. And the idea is we always want to be able to have a 2-to-1 ratio. When we have a 2-to-1 ratio, this is going to be teaching us to always have double our win than what we had of a loss. Now, the example I just showed you was a great ratio. Had a $4,000 win to, again, a $200 loss. So when we have a trading plan of a 2-to-1 ratio, when we have a trading plan of where we're going to enter, when we have a trading plan of why we're entering on a certain stock for a specific reason, we are going to eliminate fear. Guys, fear is the only thing that holds you back. Prep is going to eliminate that fear. When you go in with a plan, you're going to be feeling really good about these plays. So let's just think about it in the most simplest terms. If we had a 2-to-1 ratio, we would say, hey, I'm going to buy this stock at the price of $2. Okay, 1,000 shares at the price of $2. If a stock goes from $2 to $2.25 with 1,000 shares, you are going to make a $250 profit. 1,000 shares at $2 is a $2,000 investment. If the stock goes from $2 to $2.25, out of that $2,000 investment, you make $250. If the stock loses 25 cents, you lose $250. You sell again your position, you sell your shares, you are either going to be getting $2,250 back in your account as you make money, or you're going to be getting $1,750 as you just lost money. So the thing is, what's the 2-to-1 ratio? 25-cent target, what's your loss? Stop loss is going to be 12 cents. This allows you to make back your losses with one win. The thing is, traders, unfortunately, a lot of traders are going to end up losing when they first start. They're not going to study enough. They're not going to practice enough. They're not going to paper trade enough. Or again, guess what? It just takes time to be successful. It takes time to learn how to be able to cope with the stock market. So the thing is, a lot of traders are going to end up losing more than what they win in the very beginning. Okay, I want you guys to understand that. So it's going to be nice if we follow this 2-to-1 ratio where we are going to be able to say to ourselves, okay, if I lose, it's all right because I'm going to make back 2 losses with 1 win. Okay, now let's go through here. We already talked about a lot of this, using our stop losses. Let's go through here and give a little perfect example of why this works. Let's imagine this is your portfolio. Deck, it is the start of September in 2025. I want to get ourselves excited. I want to get ourselves ready to rock and roll going into 2026 here. Let's again say we are starting off with a $0 profit win in our portfolio. Now, what do we have? Let's stick to the strategy. My strategy is going to be, I want to make $500 on every trade I make, or if I hit a $250 loss, I'm out. 2-to-1 ratio. Beautiful. Hey, we're first starting our trades. I end up taking a loss. I lost $250. Okay, you know what? No worries. That was my first trade. I'm going to try again. You again, stick to your rules, but unfortunately you lose, but you get out with a $250 loss. Okay, no big deal. Let's say again, you make a trade, you win. Boom. Guess what? You just made back both losses. Let's again, imagine once again, you win. boom. Hey, Deck, this is amazing. But let's say again, you get a little iffy. You end up taking a loss right here. Okay? You get a little iffy. You take another loss right here. Okay? No problem. Let's say again, you get one win. One win, boom. You get another win. Boom. Right? This is awesome. This is great. Let's imagine again. You take a loss. All right, it happens. You take a loss. All right, it happens. You took another loss. All right, it happens. Let's say again, you get one win. Boom. Traders, what do you guys realize? Let's just again count something on up right here, right? Let's realize how many losses do we have? How many losses did you just take on your portfolio? You have 1, 2, 3, 4, 5, 6, 7 losses. 7 losses have now occurred. How many wins have you had? You've had 1, 2, 3, 4, 5 wins. So guys, you have about a 40% win rate right now. 40% win rate. 60% of the time you lose. Oh, Deck, that doesn't sound good. You lose 60% of the time, but because you follow the 2-to-1 ratio, guess what you just did? You lost again $500. You made back the $500 in one trade. You won $500. You just lost $500. You won $1,000 right here. You lost again $750. You win again $500. Now again, you're up what? $1,000 over or $1,200. So essentially, look what your P&L is doing. Your P&L, even though you've lost 7 times and you've only won 5 times, you have still gone from $0 up to $1,250 with a losing rate, with again, you not winning nearly as much as you are losing, and again, you're still profitable. How are you doing that? How are people profitable when they lose more than they win? And that's because they're following that 2-to-1 ratio plan. So that's a great way to be able to have success. That's a great way to be able to continuously make money in the markets. And that's a great way to be able to understand, wow, what is going to be happening here over on these trades here, guys, right? So great way to be thinking. Now, let's go over, another areas of support and resistance here. And this is going to be trend lines. Trend lines are not just going to be our horizontal lines, or these are going to be more of they are going to be our horizontal lines. They are not just going to be our flat lines. Trend lines are going to be areas where we can see when stocks are going to have bullishness or bearish towards them in a certain trend. Now, the greatest thing about these is predictability. I hope what I'm teaching you about today and what I'm teaching you about in the stock market is fully about predictability. Predictability on entries and exits. Predictability on, again, finding the best plays, and predictability about entering these plays with confidence and conviction. That's what we want. So an uptrend is exactly what it sounds like. It is where we are going to see a trend consistently climb and consistently move on up. Now, what's the greatest thing about an uptrend? We have the answer. Guys, when we get the answers, don't we feel good? What do you mean by we have the answer? We know exactly where to enter. The moment that we have a trend line is the moment we know exactly where we can enter and be profitable. We know exactly where we can enter and say to ourselves, we should get a dip buy and bounce buy. The moment where we could say, okay, if I put a stop loss underneath this area, I am now following my 2-to-1 ratio. I know I'm going to be able to have maximum reward with minimal risk. And that's where we can make a lot of cash. A downtrend is going to be the same exact thing, just completely opposite, where we are seeing a fade and a fall, and you're saying, hey, Deck, I want to go ahead and short this play. All right, absolutely beautiful. Where do we short it? Short at resistance, short at resistance, short at resistance, short at resistance. Well, Deck, what if it breaks resistance? If it breaks resistance, this is your stop loss, where you know that the stock can turn and spike, and as you guys can see, breaks of resistance is the break of the trend, where now we are going to have a bearish play now turn into a bullish play. So trend lines going to give us predictability. Now, a lot of people always wonder, how can I be able to have that validation that a trend line is going to work? It is a nice little balance. And what do I mean by the balance is? The balance is going to be the earlier you find a trend line, the more money you're going to be able to make. Now, if I could find a trend line right when it's beginning, I can make a lot of money as I can ride that trend line all the way on up and not have any fear. I know that trend line's building higher lows. I know that trend line is continuously spiking on up towards that next leg. I could be able to find a trend line early. I can make a lot of money. Now, the thing is, the later I find a trend line, the easier it is to feel confident about. I see the trend line. I see that it's holding. I see that it's working. But the longer it is, the better chance it has of breaking. Can you see where the issue now lies? Okay, so sometimes I might have to, again, imagine a trend line's forming for me to enter so that I can make the most amount of money. Or if I wait until I visually see a trend line, that's great, but that usually means the trend line's been holding for a long time. We could see that crack in the near future. Correct. So it's all about trying to find that little middle balance. Usually the best way to be able to find a trend line is going to be probably on that third touch, right? One trend line is going to be first establishing resistance. Two is going to be enforcing that higher low. And three is going to be kind of confirming it. So once you have that third touch, that is usually a great area where you can go ahead and look for entries. One, we don't really know that dip buy is going to be happening. Two, we could be able to say, wow, is that a little bit of higher low? Can I look for an entry here? Three or four right here is, wow, okay, this is the dip buy. After, again, you get your fourth or fifth touch, there is a great opportunity that we are going to most likely crack it pretty soon. Imagine trend lines or imagine support as like jumping on ice over a lake. You jump, guess what? You might jump 1 or 2 or 3 times, but eventually it's going to start cracking. Eventually you start seeing some cracks of the ice, and if you keep jumping on it, you're eventually going to go through. So the thing is, the more you jump on the ice, the better chance you have of cracking it. If I jump on ice 2 or 3 times, I might be okay. But if I jump on it 8 times, eventually you're going to crack. Same exact thing with going up through resistance. Just like I showed you this example. We had 4 different touches. Eventually, we break through that resistance and we start moving ourselves on up. So it's always great to try to enter earlier over on these trend lines. So how do we draw trend lines? Do we connect lower shadows? Do we connect the body of the candles? To be frank with you, it's about what makes the most sense. Let's not be so specific where we are trying to connect every single uptrend or downtrend. Let's not try to connect every single real body of the candle. Let's not try to connect this or that. All we're trying to do is connect what makes sense and what visually gives us the easiest answer. What is going to put the odds in our favor? Right? So if let's say we go to today, right? I have no idea what's going on today, but let's say we go over to a 2-minute time frame of today. Can we find any clear-cut trend lines that are going to make sense for us? Well, traders, what I am seeing over on ALLR right here is I would say there is a clear-cut trend line. What I would do is connect the dots here, right? Connect this dot to this dot to this dot to this dot. Would everyone here agree with me at this moment that this would be a great trend line over on ALLR? ALLR, I think this would be absolutely awesome for us, where we can clearly see where it's bullish, right? And if I spell bullishness correctly, it would be easier for you to understand. So what we have right here is we have clear bullishness, clear buying volume, clear hype, clear momentum. And then on top of that here, we do have bearishness. We do have, again, where people are getting weaker and fading and falling and dropping. So now we already have our answer. Everything that I've told you, everything that I've already gone over, we are now, again, being able to find our predictability. We know that we have our touch right here. Beautiful. We have a touch right here. Beautiful. We have a touch right here. Beautiful. If we entered on any of these, there's money making. There's money making. There's money making. But the issue is if we crack. And the longer we bounce off of it, the better chance we have of eventually cracking and most likely falling down to the VWAP. And if we fall on down to the VWAP, you could look for a dip buy there, but you got to have a stop loss underneath that. And if that cracks, again, things will get very ugly and start getting very weaker. But the thing is, traders, this is great. This is awesome. Now, not only can we see that there's an uptrend, but I'm also going to say there's an uptrend as well with maybe some resistance. Right? Would you guys agree with that? That maybe every single time, and this is just, doesn't have to be perfect. It just comes on down to giving us a good idea of where a stock may reverse at. So now again, if I'm trading ALLR, which is the #1 top gainer in the stock market today, right? ALLR right here, currently up 114%. I could see that over on my trade idea scanners. I could see ALLR this morning. Guess what, guys? Top gainers with news here today. What was the #1 top gainer with credibility? Oh, wow, look at this. ALLR, 3-star press release. Granted a fast-track treatment for cancer. Okay, that is absolutely awesome. I can get more details. So we do have a good, credible press release. As I said, it's not tough to find the #1 top gainer of the day. Literally, all I do is open up my Fox Runner scanner every single day and I say, oh, wow, ALR, best #1 play. Okay, go over to my news alerts. Today's a full watch list. ALR, #1 stock to watch. ALR, up 80% on the day. Okay, what's one of the top plays? 80% gain, ALLR. Right? Like as I said earlier in this lesson, it's not difficult to find the #1 top gainer. We have all this amazing equipment and scanners that are just going to give us the answers. But again, where you have to actually be successful is saying, where can I actually enter? Where can I feel good? Where do I have a price point that I could be able to make money? Right? So as you guys can see right now, look what's happening. Whoa, ALLR, guess what we just saw? This is awesome, traders. I love the fact that I'm teaching right now in real time and we are seeing exactly how these trend lines work. Guess what? We just fell through the ice. didn't we? We just fell perfectly through the ice. We know we had 1 bounce, 2 bounce, 3 bounce, and ooh, guys, guess what? We're bouncing on that ice. That ice could crack. That's where predictability is. This is not recorded. This is not like, this is literally live in this specific moment. What I am teaching you right now is what you can apply to your trading, and you can see it works. You can have all the confidence of what I'm teaching you right now on this is what works, and this is how traders and this is how Wall Street traders predict the stock market. This is how, again, you guys can be able to make a lot of money, and this is how you guys can be able to make a lot of cash. Okay? So, you guys are absolutely great in every single way to be able to make money, and you guys can be able to make that big time cash and be able to make that big time money. So beautiful, guys, right? Absolutely great in every single way. All right? Absolutely awesome in every single way. Traders, let's keep this party going. Let's keep going to our next area. Let's keep making our cash. Let's keep making our money and what we can be able to do next over on these plays. So the next thing that I want to be able to talk about right here, and actually, let's just give a couple examples over on these trend lines. A couple examples over on the trend lines. SPHS, trend line forms, stock starts getting weaker. SGY, trend lines form, stock starts getting weaker. AQST, trend lines form, stock starts getting weaker. You can clearly see, where the bullishness is and where the bearishness is. And I think, again, you know what, it doesn't matter what chart you look at, you can clearly see that over on ALLR, the pure example of what we just had right at this moment. So let's keep on moving here, traders, and let's go to our next opportunity and what we want to be able to learn. And I think, again, what we want to learn next is what a lot of people get excited for. And that is going to be our breakout chart setups. Breakout chart setups, breakout patterns that are leading towards huge rips, huge runs, huge opportunities, and huge climbs. So this is what everyone always is asking. What are the best patterns to be focusing on when we're taking looks over on these plays? Now, traders, what we always want to be looking at is these U-shapes and triangles. U-shapes is establishing resistance, U-shaping back up to resistance, and breaking on out. Triangles is going to be a stock getting tighter and tighter and tighter and tighter inside of a wedge, and that's where we get our very big breakouts. So when we're talking about breakouts, remember how I talked about, in general, do not buy at the break of resistance. It's always smarter to buy at the break, at the bounce off support. These are going to be when that resistance actually does break. When we actually break through resistance, when we actually see that happen, that 1 out of 10 time, that 1 out of 5 time that we move on up, it's either going to form from one or two ways. Number one, it's establishing resistance right here. And guess what we do? The stock falls on down, breaks on out above that resistance, AKA we formed a U shape. The other opportunity is when a stock is going to go on a very big spike. We find resistance right across the board right here. And then the stock does what? It consolidates. And as it consolidates, it gets tighter and tighter and tighter until we get that breakout where we have, guess what? We have that triangle. Now, can anyone see anything that has already happened, which is enforcing once again everything that I'm teaching you? Because what I just taught you, didn't we see that perfectly just occur over on ALLR? We saw the channel and the dip buy and the bouncing, and then we saw that we broke in real time together, that we fell underneath the ice. How perfectly this worked. Now, just from that small little inch of U-shapes and triangles, can you guys see ALLR's breakout? ALLR, this is the #1 top gainer of the day. This is not recorded. This is not anything. This is today, right now at this moment. Do you guys not realize that here's our strong resistance going across the board, and now again we have that nice little triangle? Would you guys not agree that that is a bull flag setup leading towards that big time breakout? So ALLR, what do we have? Here's top resistance. Absolutely beautiful. Notice again what we have right here. Stock is again getting tighter and tighter and tighter. As that stock is getting tighter and tighter and tighter, we have this nice wedge. As the wedge is now forming, we have bada boom, breakout buying volume starts moving on in. Deck, what do you mean by breakout buying volume starts moving on in? Well, again, you can see at the very bottom of the chart, I don't look at this often, but you can see larger green candles. Larger green candles, larger buying. We see where the hype is starting to move in over on these plays. So U-shapes and triangles. That's what we're looking for. Breaks of resistance is where the hype is going to be moving on in. So let's talk about some of the most popular patterns there are for you guys to be able to make the most amount of money. One pattern that I do like, that I see a lot, especially for, again, smaller penny stock traders, is going to be the $1 breakout. One thing that you guys will always want to know is there's a few key points on every single breakout play. They all have a few things in common. Number one, they all have massive volume. Number two, they all have extremely low floats. And number three, the longer a play cannot break resistance, the bigger the force it's going to be when it breaks on out. For example here, traders, let's imagine, just hypothetically, let's imagine no one has ever thrown a baseball 100 miles per hour before. People throw 99, people throw 98, and it takes 100 years, and finally someone throws 100 miles per hour. That might be a big deal. Why would it be a big deal? Because it lasted 100 years before, again, we broke that area. When you have a strong resistance or a strong support line that has lasted a very long time, when it cracks or breaks above it, you are going to see a very strong move. So, what I want to talk about is kind of those top three things. Number one is we want to look for a lower float. When I'm referring to lower float stocks, I'm referring to stocks that are sub 10 million or lower. We talked about what the float is. The float are the shares available to the public. The lower the float, the lower the supply. When you have high demand, aka higher volume, you're going to see a very big breakout. So, what do we have right here? We have right now, just took the number one top gainer spot, HKPD. HKPD is up 108%. Notice where it says FLT right here, 3. Now, why is it saying 3? That means 3 million in float. When we have 3 million in float, such as over on HKPD, now we have all this buying volume competing against this. So for instance, imagine if we had 3 houses available for sale, 3 houses available to sell, and 100 people want those 3 houses. Well, only 3 people out of the 100 can get it. So the price is going to get bidded up extremely high. So you guys, again, you go in the housing market right now, it's very competitive. There's not many homes for sale. People want homes. Guess what happens? The price goes up even higher. It's the same exact thing in the stock market. Take a look right here over on the number one top gainer, HKPD. HKPD is the number one top gainer with a 110, 111% gain. If we go over to statistics right here and we scroll on down, what do you guys realize? It says 3.42 million in float. Anything sub 10 million is a low float. Now, if we go ahead and we go back over towards summary, we know we have 3 million shares. On a normal day, out of the 3 million shares, 1 million shares are traded. So out of a normal day, 1 million shares out of the 3 million are traded. Guess what we have right now? The volume today is 51 million. That means that 3 million shares has been traded over and over and over and over and over and over and over again. People are buying shares, waiting for the price to increase, selling their shares. Someone else buys it, waits for the price to increase, sells the shares. They buy it, wait for the price to increase, sells their shares. Those 3 million shares are in high demand. Usually, guess what? Usually, this stock is only getting 1 million shares traded out of 3 million. There's shares left over for everyone, which is why on a normal day, HKPD doesn't do anything. But today, HKPD has all the hype, has all the buying volume, has all the attention. So this is what I want you guys to truly understand about these plays, where we are seeing what? We are seeing low float, we're seeing big volume, and that is leading towards the breakouts. Now, Deck, I'm already seeing some of the things that you taught me. What are you seeing right here? Do you guys see a U-shaped pattern right here that leads towards a little bit of a breakout? You guys see a little U-shaped pattern right here that's already leading towards a little bit of a breakout, right? We want to see, start looking for maybe these U shapes and triangles, start looking for these ideas. So I like to test myself. I like to go through like some top gainers every now and then and just, ask myself, do I see anything starting to form? Like for instance, I see a very big spike over on STKH. I see a big U-shaped pattern starting to form. But please remember, guys, something. What do we need to remember? 85 cents going to be strong resistance. It's not going to be easy to break above. Same exact thing with the VWAP. VWAP is going to be strong resistance. I do not want to get you into the habit of just buying at the highs. And again, I truly want to enforce that. Now, the thing that I was talking about before with the $1 breakout is the longer we are underneath $1, and when we eventually break $1, the more hype we will get. So the trade that we're sitting on, MSTR, this is almost like an opposite example, is what do we have on MSTR? MSTR has been able to hold the 50-week moving average for about how long? For the last 2 years. Bounce play, bounce play, bounce play, bounce play, bounce play, bounce play, bounce play. If MSTR cracks this area, something that has been a significant support line for 2 years, that is where we are going to get a very nice breakout. It would be the exact opposite if, let's say, we break 345. 345, we hit it, we got rejected, we hit it, we got rejected, we hit it, we got rejected. We basically have been sitting underneath 345 now since what area? Since, November of last year, almost the last 11 months. So the thing is, MSTR, imagine what would happen if maybe we formed one ginormous, big wedge pattern right here. Let's turn off the indicators here for a second. And you guys start seeing, show indicator, you guys start seeing this huge wedge pattern, this big triangle start forming. What do you guys think would happen if all of a sudden this stock over the next few months or over the next 6 months gets tighter and tighter and tighter inside this wedge and eventually squeezes and breaks? I mean, it would be a massive explosion. So the thing is MSTR going to crack this area and fade all the way back down to 250? Or is this the perfect dip buy opportunity on an uptrend before, again, we start moving ourselves back up in this triangle and hopefully get back up towards around that 440, making it a giant wedge pattern? So remember, everywhere we're looking for these two shapes. We're looking for U shapes. We could see our first big U shape get rejected. Now we're looking for this triangle, higher lows and consolidation, holding this uptrend, right? The longer, again, something holds, the better. But again, when it breaks, it's going to lead towards very big action. So again, $1 is one of those perfect trades where if you ever see a stock that's under $1 for a long time and has a low float and the stock again is looking to be able to move on up with big volume, you could see a very large breakout and a very large move. And that's something that's exciting, and that's something that's very cool to be able to see, and that's something that brings in a lot of excitement into the stock market every single day. As you guys can see, little U-shaped breakout patterns right here. Establishes resistance, U-shapes on up, breaks resistance. Remember, I'm not opposed for you guys looking for buying up breakouts, but please have a stop loss in case it does not work. Support is always going to be a better area to be able to get involved in. As you guys know, low float can be any time frame, 1 minute, 2 minute, 3 minute, 5 minute time frame. Watch for a break of the resistance in that U-shaped breakout pattern. As always, large volume is a must. Must be a top gainer play. Top gainer could be a stock with hot news. Top gainer could be a stock that has some sort of gap up. Top gainer could be a stock that has a lot of attention for whatever reason. Next very hot pattern is going to be a red to green move. This is going to most likely be when a stock has a good credible press release in pre-market, has a large gap up, and since it has such a large gap up, you do get a little sell-off right at the start of the day. Or sometimes it's from the stock being a previous top gainer, has a little bit of a gap down, that selling momentum still holds, and before it U-shapes its way back on up, to get a nice big spike. So for instance, here's a good example of it. The RGSC was a previous top gainer. The stock opened on up, and guess what? It faded on down at the start of the day. We moved ourselves back on up, broke through the open, and that's where the stock had a nice explosion. It went red on the day, then went back green on the day. And this is what gets a lot of people excited. When a stock goes red to now going green, when it breaks its opening price, that's where people get excited. It's the same exact thing right here if I took a look over on CATB. Stock had good news. Stock had good news, had a nice little gap up. Since it had a gap up, people took profits right at the start of the day, but now it has good news and the stock came on down towards more of an affordable dip buying price. U-shape happened, broke through the open, people start getting that hype. Bull flag patterns. Bull flag patterns. Low float, big volume, looking for consolidation and looking for that wedge setup. Once we have that wedge setup, that's where, again, we see the nice explosion and the nice move. Exactly what we just saw over on ALLR, the pre-market top gainer of today. Stock spiked on up, formed consolidation. That wedge got tighter and tighter and tighter while building those higher lows, and that's eventually where we got that nice breakout. A different form of a bull flag is going to be an ascending triangle. An ascending triangle pattern is going to be almost the same exact thing as a bull flag pattern. They're just going to be different on how the top is established. When you have a bull flag, a lot of times you're going to be building lower lows and higher lows, basically forming more of a flag looking pattern. An ascending triangle is when you're going to have strong top resistance with higher lows. So for instance, you're going to have resistance be established and then you build higher lows into the wedge. Regardless, if you see a wedge, if you see a triangle, something spectacular is going to happen in the corner of the wedge. It's where all this volume is going to be flooded in, and again, eventually we're going to see some sort of break. Mid-candle breakout pattern. One of my favorite patterns out there. Stick with me right here, traders. This is how the mid-candle breakout pattern works. You're going to have multiple days. Usually, again, day 3 or day 4 is when you have a spike. Day 1. we have a press release come on out. It says stock has cured cancer. Okay, that's an example. The stock is going to go on a 200, 300% move. The next day, since it's gone on a 200 to 300% move, the stock has now fallen on down about midway. Now, why is it falling after good news? Because the stock just spiked 300%. People are going to take profits. Now, day 3 is where traders say, hey, it's now a dip buy opportunity. This stock just went on a massive rip and run. Yes, it fell yesterday because it went on such a big spike, but people basically shorted it and sold their shares all the way back on down. I want to re-enter on it because it did have good news 2 days ago. So where would this example be? Like BSPM, massive spike. Stock falls back on down because people take profits and then people realize it's a great dip buy opportunity. Let's enter back in, which leads towards usually brand new highs. Stock goes on a massive spike, falls back on down to mid candle of the entirety of the spike, finds again support, moves its way back on up. Stock goes on massive spike. The next day again falls back down to mid candle. People again look to see where this one's going to be heading towards, gets that nice big breakout. So the thing is, traders, this only happens on the daily chart. This does not happen on the 1, 2, 3 or 5 minute chart. Everything else can happen on a minute chart. These happen on a daily chart. Same exact thing with a descending triangle pattern. A lot of times descending triangle patterns will happen more on a daily chart, not a 1, 2, 3 minute chart. So again, a descending triangle pattern is usually when you have a massive spike, the stock fades and falls and drops until we find a great dip buy opportunity. Stock squeezes and breaks its downtrend. So imagine if we had a big rip and then day after day after day after day, it forms a downtrend. Now, after we cross that downtrend to the bullish side, buyers move in, and we start getting an absolutely great breakout. For example, right here, KONE. Stock goes on a massive rip, forms this downtrend. Look what happens when we get to the corner of that triangle. We find support. We have the corner of the downtrend. Buyers move back on in, and you get an explosive day. Same exact thing with JAGX right here. Stock again had a massive rip and run. Stock again starts getting tighter and tighter and tighter on that downtrend. We finally break that downtrend. That's where we get a lot of hype. That's where we get a lot of momentum, right? So traders, these are breakout patterns, and we've talked about, where to buy them. Remember the A, B, C, and D. A establishes resistance, B is the pullback, C is the higher lows, D is the breakouts. Same exact thing with over on triangles. Triangles, guys, we have our A, B, C, and D. Let me show you what we have over on A, B, C, and D over on our triangles, because again, we showed you guys over on U-shapes, but what about triangles here? Again, U-shapes, very simple, very easy. Spike, fall on down, get the breakout. Remember, A establishes resistance. B is going to be a stock falling. C is going to be where a stock is going to start building higher lows. And D is going to be our breakout. Fantastic. Amazing. Now, where do we have triangles? Triangles are going to be a little bit different. We are going to recognize triangles by seeing, number one, we have a very nice spike. A establishes resistance, right? B is going to establish our first little bounce. Then we're going to have C establish our higher lows. And D is going to be the corner of the breakout. A establishes resistance. B establishes the low. C is going to be our higher low. And D is going to be our breakout. Where is our triangle? Top resistance going across the board right here. Then on top of that here, we have our higher lows. Stock again building higher lows. And all of this buying volume is getting tighter and tighter and tighter and tighter and tighter until foomp, you get that breakout to the upside. Best way to always think about this, guys, very simple analogy is just going to be, imagine if there was a big lake. Big lake right here. And guess what? When you look at a lake, it's very nice and calm. But what happens at the very end of the lake? There might be a river. Now, if all of this water pressure is feeding into this one little canyon, that's usually where you have all this crazy whitewater rapids where you have very high water pressure because everything's getting feeded into that corner. Same exact thing when we guys are taking a look over on, let's say, these triangle patterns, right? If I took a look over on ALLR this morning, we have all of these traders, right? We have ALLR this morning. All of these traders are doing what? Feeding into this little tiny area, right? We take a look over on this play. What are we realizing? Wow, there's top resistance. We have this nice little triangle. We're feeding all into this area until boom, we get that explosion. So ALR, this explosion all happened because it was all feeding into that one little area. Notice, traders, what are we seeing right here? We are seeing that we are back inside of this wedge. We are back inside of, this channel pattern. Traders, if someone asked me right now, Deck, where would be the best dip buy? Best dip buy is going to be right where around that lower shadow just came on down to 204. So stock actually did what? If we wanted to break down ALLR today, we had a beautiful channel pattern. bouncing off support, top resistance, bouncing off support, top resistance, bouncing off support, top resistance. We fell through the ice. The stock cracked underneath. We again went bearish on the day. After that, guess what? We U-shaped our way back on up, exploded back on up, hit again some old spiking high resistance off this resistance line. And now guess what? We're probably going to fade back on down towards around that 205 mark. If we come back on down to 205, that is now going to be continuously keeping this going for the bounce play off this area. And let's see if we could possibly get that. I want to see if, maybe ALLR is going to bounce off this area and keep this channel alive on what was this morning. So ALR, absolutely beautiful so far. Still, again, just, following the same exact setup that it has been. And this is what we're talking about. We're always just trying to find predictability. If someone said, Deck, what's the perfect way to trade LLR? Short it here, short it here, short it here, short it here, and short it here. Deck, what's the best way to, again, buy ALR? Buy it here, buy it here, buy it here, buy it here, and buy it here. Right? That's what I would do if I were you. And then once you buy it, you short at the red line. You again short it, you sell it at the purple line. You buy it, you sell it at the red line. Just go back and forth over and over and over again. And when you see that, that's going to give you the best example of success. So, ALLR, still in play, still a stock that you guys would want to continuously be watching, focusing on, and seeing what we have over on these plays. Let's keep this party going here, traders, because we've gone over a lot of great things. We've gone over a lot of great setups and a lot of great plays, but let's start understanding more about how the stock market works, guys. We've gone over support and resistance and trend lines. We've gone over, again, float. We've gone over volume. We've talked about what to look for, but let's also start understanding a little bit more about how stocks work. Now, I've given you guys the very small example, the very small briefing about this, psychology in the stock market. But this is your new superpower. Your superpower is understanding how stocks are going to go, because you're understanding not what you think is going to happen, what everyone else thinks is going to happen. So, what's psychology? Does anyone know? What is psychology? Psychology is the scientific study of the mind and its functions. We are understanding the mind. We're studying on how people think. How are you thinking? How is your mind thinking? Your mind might be thinking, I want to buy ALR. Cool. That's what you're thinking. But remember, guys, you are one fish in a giant ocean. A lot of times, if you want to be successful, you need to think, how is everyone else going to want to buy? Now, if you want to make a lot of money, you are going to have to do things differently than everyone else, because people lose. But what does the majority of people do to lose? They wait till a stock goes on a big time move, then they buy it. They see a stock going on a big time rip and run, then they buy it after they feel confident, after they see so many other people made money. Oh, so let me make money. You're late to the game. You have to be ahead of what we call the mob. The mob is the majority of buyers. If you beat the mob to a stock, if you beat the mob to a play, the mob will buy in after you. And if the mob buys in after you, that's where you make a lot of money. Unfortunately, yes, guys, it's a dog-eat-dog world in the stock market. If you get in on a play and everyone else gets in after you, you will make money because everyone else is buying in after you. That's how you have to think about it in the stock market. You have to say, I need to jump in before Wall Street jumps in. I need to jump in before Wall Street Bets jumps in. I need to be able to get into this play first. So when everyone else buys it, my profits are getting pushed up as high as possible. That's what you have to think about. So how do you think about that? You have to think about it in a more of a psychology way, but also a sociology way. Now, sociology is the study of groups of the mind. So again, we can understand ourselves, but can we understand how everyone else is perceiving that play? So that's how we're trying to mix it. We are waking up every single morning and we're not sitting down and saying, what am I going to trade today? I'm sitting down and saying, what is every single else? What is every other trader going to trade today? That's what I'm thinking about. I don't care. I have zero preference. I don't care if I play stock XYZ, ABC, DEF, GHG. You can say, Deck, I like this play. Hey, me too. I like that play as well. As long as I believe other people are going to like it, right? That's what investing is. Investing is trying to find businesses. Investing is companies, stocks, before it becomes appealing and attractive to others. And if you can find that, that's where you guys are going to be able to make a lot of money. So how do we know it's appealing or attractive to others? Well, there's a few different ways. Number one, guys, is we could start seeing an increase in volume. right? We start seeing a stock start, hey, we have 1 million shares over on this trade. All of a sudden, maybe today we have 2 million or 3 million or 4 million or 5 million. We start seeing volume start increasing over on these plays. But let's think about it. Why would volume increase on a play? Well, the majority of the time, it's because they have some sort of news behind it. They have some sort of press release behind it. If you have a credible reason on why to buy, it's going to make people want to jump in on this play. This is why Fox Runner is the number one tool that I use, is because if we can find every single morning what is the reason on why these plays are going to take on off, that's where I'm going to be able to make money. So what I do every single morning here, guys, is I look at these press releases. Okay, this is what I do every single day. It's so simple, it's so easy. I want everyone to be able to do it as well. Here is, this is what you do. Okay, come on over here. Go over towards additional filters on Fox Runner. We're on the Fox Runner scanner, by the way. And all we're going to do is go to 0 to 20 million in float. Because guess what, guys? There are 10,000 active plays out there in the stock market. We do not care about the majority of them. If I go over to finviz.com here, just to give you guys a little bit of a reference, I go to Finviz and I click screener. There are 10,362 stocks that I can go ahead and trade right here and right now. Do I want all of these plays? Not at all. What I want is I want to look for the lowest float plays, stocks that are going to actively spike and move on this day. These are the lower float plays. So I'm going to under 20 million. Guess what? We just got rid of 80% of fluff. 80% of fluff. Those are plays that, again, not even worth our time. So now we only have 1,900 plays out of the 10,000. Now, out of these 1,900 plays, guys, probably a few hundred of them are going to come out with news every single morning. And those are the news that we are going to want to be focusing on. So what I'm looking at is 0 to 20 million in float. Now, what I also know is news is going to come out at 7 o'clock, 7:30, 8 o'clock, and 8:30 every single day. So if I'm again staring at this scanner during the hot times, the stocks with low floats are coming out at 7 o'clock, 7:30, 8 o'clock. And if they have hot keywords, those are the ones that are going to make me the most amount of money. So it's very simple. If I wanted to say, hey, Deck, I don't want to have any, I don't want any stars. And again, this is what like most press releases are at, where there's like no stars in any sort of way. There's no help in any sort of way. It's like, it's all bland and boring. And let's imagine again, there's no keywords. Okay, now there's no keyword. Guys, this is very tough. It's very tough to be able to say, oh, what's the best press release? What's the best stock? Because it's so simple for me to say, oh, hey, go buy the best press release. Well, the thing is, the reason why I use Fox Runner is because it tells me what's the best press release. I want to turn on what's the best of the best. Give me all the hot keywords, positive phase data, positive drug trials. Show me what's approved, what's getting received, what has achievements. Show me again what's completed, what again has the best press release. So we always get a star rating. On top of that, I add my own keywords. I add the keywords that I think have the best opportunity success. And then I also add voice alerts to it so it reads out when a hot press release comes on out. Because yes, at the end of the day, it is first come, first serve. When you are the first one in on a play, you make the most amount of money. So guess what I'm doing here, traders? I have the hottest keywords set, I have the rating set, and I have voice alerts set. Let's see what happens at the time of 8 o'clock. All of a sudden, hey guys, it's 7:59. Let's watch to see what comes out with under 20 million in float that has a low press releases. Let's see. 8 o'clock, ALLR. 3-star word right here. 3-star word showing me what? That it does have the treatment of cancer. Guys, this is absolutely fantastic. Treatment is highlighted for me. That's a 3-star word. Cancer is highlighted for me. That's a 3-star word. This stock, ALR, is bringing in hype, bringing in attention, right? We can already see cancer is one of those press releases that I absolutely love. Agreement, treatment, one of those press releases I absolutely love. One of those keywords that stands out to me. I also have it over on voice alerts as well. So if we are wondering, how do we find these press releases so quickly and so fast? It does come on down to, number one, it's over on the Fox Runner scanner. Number two, it's posted 30 seconds later on the Fox Runner analyst play as well. And now I'm beating the mob. So ALLR, guess what? If you're finding this at the price of 8 o'clock in the morning, what time is that? I mean, where is this stock at? It's at $1. It's at $1 before it goes on this 100% move. If you find it at 8 o'clock, or maybe you find it at 8:05, or you find it at 8:12, or you find it at 8:30, you're 30 minutes in. You're still beating 99% of the mob. And it's one of the best press releases because it has credibility behind it. So ALLR right here, this is one of those plays that even if you were late by 30 minutes, you could still make a lot of money over on this play. Notice ALR trying to get a little bit of a dip buy and bounce off the trend line right now because that is where the bullish trend line and where buyers can move on in. But again, trend lines, and we're thinking about it, is where is everyone else going to want to buy here? Every single person is looking at the number one top gainer because it had credibility this morning and is now saying this is the stock that's going to be able to make me money. So the mob is extremely important to be able to learn and study, thinking about the majority of buyers and where they are going to be heading. So the mob equals the majority of buyers, the majority of traders that buy anything that moves. Over 70% of stock traders fail while less than 30% succeed. We talked about why is that? Because they're always chasing the top. We have to be a leader, getting in first, having confidence. Traders, you know what's the greatest thing about buying in first as well? Is if we are so low on the play. Let's say we jump in on ALR and nothing happens. Okay, nothing happens. It's not like the stock is going to come out with positive drug treatments and dumps. That rarely happens. Has it happened? Yes, it has. And sometimes it's weird, but it's like a 1 out of 100. The majority of the time, you're going to jump it on a play. The stock is going to go on a massive spike and rip and run, and you're going to be one of the first people in. In rare cases, you're going to jump it on the play, and it does nothing. And guess what? You get out of the play. No harm, no foul. In extremely rare cases, you're going to jump in on the stock, and it's going to dump off of positive news, which is extremely rare. Right? But the mob is essentially like these seagulls from Finding Nemo. Mine. They're all just copying each other. That's what the mob is. The majority of buyers, they have no idea what they're doing. The majority of retail traders have no idea what they're doing. They're just following what their favorite person on social media says, and they're just buying at the very tippity top. So, why is it that so many traders lose? Guys, how does this make sense? How do so many traders lose when there's so much opportunity to be successful? Right? Doesn't that blow your mind? It blows my mind. It really does. Because there are so many chances that you guys can be successful in the stock market. Number one, you guys can enter early. This is where, let's say you guys are using Foxrunner, you guys are getting in early, you guys are all set. 2% of traders are going to study the news, get in right when things open on up. That's beautiful. The majority of traders are going to enter right when a stock starts picking up a little bit of hype. Maybe the stock starts picking up a little bit of volume. Maybe the stock starts getting a little bit of hype. Maybe the stock starts getting some action. And the majority of successful traders are going to get filled when a stock starts spiking up towards new highs. Now, the most traders are going to lose though. And why is that? Because now the stock has already spiked. The early traders are already in. The breakout traders who got in, they're getting ready to sell. Now, the majority of traders are buying at the very tippity top, basically just giving an exit to the earlier guys here. Remember, stock spikes up, 100%. I'm getting out. I'm not buying at 100% gain. Are you crazy? But the thing is, this is where emotionally we're connected to it. Wow, it's a great spiker. Emotionally and visually, we see that it's a winner. Wow, it's winning. Other people are making money. I can make money on it. Let me buy at the worst price possible. That's where the majority of traders buy. Then again, guess what happens? The stock starts falling. And you can make money, of course, as you short the stock back on down. Again, you could short it right here. You can make money. Or again, you can make money as the stock again goes all the way back on down to the dip buy opportunity. So now it blows my mind right here. How are you not a full-time stock trader? How are you not a successful stock trader? How are you not making hundreds of thousands of dollars? How are you not doing this every single day as a living? How are you losing so often? Guys, you could have bought in early. You could have bought in right when it starts breaking on out. You could wait till it gets to a top and short it. You can go ahead and wait till it falls apart and dip buy. Why are you constantly losing? Because you're buying at the very tippity top over and over and over and over again because you can't get to the fact that your emotions are leading you down the wrong path. Your visual is setting, hey, it's at the top. People are making money. You should be making money. Oh, let me go buy it right now when it's all the way up 175%. You got to get off that. Because if you don't, you're just going to keep losing every single day, and you're going to just keep getting angry, and the next thing you know, you're going to get a divorce, you're going to lose the kids in custody, you're not going to be... Well, okay, hold on. Maybe we're getting a little too carried away. I just don't want you guys to end up taking a loss, all right? So, how do I get in that top 20%? Right? We have our early swing traders. We have our breakout traders. We also have our shorters. We have our dip buyers. There's so many places that we can be successful. So we just study, we have experience, we do the work as you guys are watching right now. And then one of the biggest things is, of course, being aware of it. It's hard to fix something if you're not even aware of it. And again, probably the majority of traders that constantly lose aren't even aware that they're losing so much. So different ways to be able to find the mob and be able to beat the mob, right, guys? Well, we're looking for those hot press releases in pre-market. We know that the mob is going to go to the number one top gainers. Where's the hype? Where is the excitement? We can study. We can look at Wall Street Bets. We can go on Twitter to kind of see where the majority of the buying volume is at. right? Understand how the mob works in different market conditions. Some days they're going to be stronger than others. Some days we'll see Reddit, attack a certain play and it takes on off. And some days, again, no sort of buying volume really moves in. So what would you guys say are the market conditions right now? Right? What would you guys say is the market conditions right now at this moment? Well, right now, again, we do have ALR currently up 132%. HKPD up 89%. S&P 500 at this time slowly trying to get a little bit of hype. I would say it's like 6 or 7 out of 10. We're not seeing a 300, 400% top gainer. We're not seeing, again, every single play take on off. But could you have made money on HKPD today? For sure. Could you have made money over on ALLR today? For sure. Could you have made money on a few different plays? Absolutely, guys. Right? There are many different stocks out there that you guys could be able to make cash on and be able to make money on. There's definitely, chances of success, even again, following this trend line and seeing what this trend line could be able to do for you. So the thing is, there are chances and success. There's probably 7 out of 10. It's not 10 out of 10. It's not 0 out of 10, but it's definitely very solid. All right. gives you a massive advantage. That gives you a massive edge. If you can see who's buying what, you could see how many shares they're buying. We might be able to see which way the stock's price may be influenced. We might be able to get a little bit of a better gauge about this play. So when we're taking a look at the level 2, let's break this on down to get a good understanding of how it works. First column, you guys are realizing, is the market makers. I'm going to be very blunt with you. This column to you and I means absolutely nothing. There is no difference on what market it's going on through. There's many different markets or routes that people are going to place their order through. If that is the EDGA or the EDGX or NYSE or ARCA, these are just going to be different routes that the order is placed through. It's not going to change anything on our end. It's just different data for traders who may want it. Next on up is going to be the price. Now, this is going to be important to us. The price is where someone is willing to buy, or again, where they're willing to sell. Well, Deck, how do I know the difference? All the orders on the left side of a level 2 is going to be the buy orders. All the orders on the right side of the level 2 will be the sell or the short orders, betting against it. Now, why is this important? Well, because I could see where people are willing to buy at or where people are willing to sell or short at. And then last but not least, we do have order size. Now, the order size is very important because that's going to be showing us how many orders are going through. Are we seeing a large order? Are we seeing a smaller order? If we have a large order, let's say 20,000 shares, well, that might be holding up as a little bit of a support line. Remember, we've talked about support and resistance, a platform and strong area of reversals. We know that we can get bounces at support. We know we can get resistance at tops. Well, if we again want to think about this in a different manner, let's say someone is buying 20,000 shares at the price of $100. Well, we have to realize that's a very large investment. Someone is putting in $2 million on this stock at this price. It's going to take a while to get enough orders to fall underneath that 20,000 share order. We might hit 20,000 shares. Other people, other traders, other investors recognize, wow, there's a very big order right here. And then the stock bounces off of that. Because the only way we go lower is we have to sell through that 20,000 share order. Just like if all of a sudden someone was selling 20,000 shares. If we are looking at the level 2 and someone's selling 20,000 shares, let's say hypothetically at the price of $10, the stock runs up to $9.99, hits $10, a few people are now buying up those shares that someone is selling, 20,000. But at the same time, there might not be enough buyers. If there's not enough buyers to take up that 20,000 shares, guess what? The stock is now going to head down the other side because that's holding up as some strong wall. That's a strong area of resistance. Not only do we have to look at the chart at some points, but we also have to be looking at the level 2. So for me, the level 2 is necessary. When I am trading a stock, I am only looking at a level 2. A lot of people think, oh, do you look at the chart? Do you look at the candles? I use the chart to do my research, right? My research, if I'm just being straight up with you, is number 1, use Foxrunner to find the hottest news, the hottest play. Number 2, use trade ideas to be able to use the charting to figure out where support and resistance is at. After I figure out support and resistance, I think about where's my entry and stop loss, and then I place it on the level 2, and now all I'm watching is the level 2. Right? I don't look at the chart really when I'm trading. I don't look at trade idea scanners when I'm trading. I don't look at Foxrunner when I'm trading. I'm focused on the level 2. The level 2 is what I need to be able to see how is the price moving. Is the stock moving in my direction? Is the stock going against me? If I don't have level 2 when I'm trading, it's trading blind. You cannot trade blind. You can't be a Ricky Bobby and throw a little bandana around your eyes and blindfold yourself and say, well, let me just feel the car. You can't do that. You can't just say, oh, let me just jump in on the stock and hopefully it goes on up. You have to be able to say to yourself, let me watch the level 2 because if these orders break, I know to be able to get out of this play. Right? The level 2 is just going to be showing us the bids and the ask. Now, it's very simple. The bids are going to be the buyers, the people that are wanting to get involved into a play. When we want to get involved into a stock, we are going to say to ourselves, hey, we want to buy into this play. So we would place a bid order. If we do a limit order, if we do a market order, it's just going to go straight to the ask. Remember, we talked about that before where we said to ourselves, okay, limit orders show up on the level 2 because we're placing an order down low. Market orders go straight to the whatever the best current asking price is. That's where we'll get filled. Don't worry if I confused you right there. We'll go over the level 2 in just a moment. The ask is just going to be the opposite side. The ask is the sell side, the short side, where people are willing to get out. So the bids are the buyers, the ask is the sellers. The time in sales is going to be all the orders that have now been through. So we have the bids, we have the buyers, and the time in sales is going to be the collective order here. Time in sales is going to show if it's green or red. Obviously, green means a buy order went through. Red means a sell order went through. And if it's white, that just means it stayed the same. There was not any sort of change within the stock in any sort of way. So when we're really thinking about it, what is the time or what is a level 2? It just comes on down to an agreement, just like you would go and buy a car. Let's imagine you walked onto a car parking lot and there's a car right there for $21,000. You walk up to the car salesman, you say, man, I really like this car. It's $21,000. I'll tell you right now, I will purchase this car in cash for $16,000. And the guy goes, I can't do that. That's a $5,000 discount. Unfortunately, I can't do it. I'll be losing money, right? You're a bid. You're a buyer. You're trying to get this car for $16,000. The guy goes, let me go talk to my manager. He comes back on out. He goes, hey, guess what? I can lower it a little bit, but I'm going to lower it at $20,000. And you say, again, I came here with $16,000. I was looking to get maybe $5,000 off. I'll tell you what, right now, I'll come up to $17,000. He goes, you know what? Let me go back to my manager. Let me talk to you about it. He comes on back, says, hey, come meet me at $18,000. I'm giving you $2,000 off this car. No one else is getting this. We can make a deal right now. Both of us are happy. Boom, deal done. That's what, again, stock trading is. Stock trading is I can place my order. I can place, hey, someone take this car, someone take my shares at this price. Doesn't mean it's going to get filled unless someone comes up and gets that. Same exact thing. I can go ahead and say, I want to get filled. I want to buy this car. I want to buy this stock at this price. It doesn't matter unless someone's willing to sell it. Or I can do a market order and just take whatever price someone's willing to give me. But this is all it is, guys. The level 2 is essentially just going to be a live negotiation on getting involved in this stock. And you could pick whatever price you want and hopefully someone gets filled at the price that you're looking at. So, are there cons of using a level 2? Well, the cons about level 2 is sometimes they move too fast that it's not going to give us the data that we really need. Only limit orders are shown inside of level 2. Market orders are going to go straight on through. So while, again, the level 2 can give us predictability, while the level 2 can show us which way momentum is moving, while the level 2 can give us the size and the price that people are willing to buy and sell at, sometimes a stock might just move in a certain direction very quickly if a large market order goes straight on through. So how would I like to read a level 2? How do I, again, gauge maybe which way a level 2 is going to be heading? Well, the best way to be able to read a level 2 is I think about it more as like, a fun little game. And we can play that game here in just a second. But a lot of people always like to go ahead and check it out more as like bid stacking and volume on time and sales. So let's think about this. Let's go ahead and start giving ourselves some examples. This is a level 2 right here on our screen. Let's go to the number 1 top gainer right now, which is NBY, okay? The number 1 top gainer right now is NBY. Now, looking at this live level 2, what have we gone over so far? I'm going to take a screenshot of it so it's paused and it's very easy. We do have the left side. The left side is going to be the bids. So basically, anyone from here over is going to be the buyers. Anything on this side is the ask, which means anything from here over is going to be sellers or shorters. Now, very simple, very easy. We have a game, don't we? We have the bids versus the ask. Who is going to win? The buyers versus the sellers. Who's going to have control? Now, we also talked about, we do have what here, traders? We do have the market makers, which we really don't care about, right? We do have the price that people are willing to buy at. We also do have how many shares someone is willing to buy at. So, little heads up. I know you guys saying, is someone buying 2 shares or 10 shares or 20 shares? Just because it saves space, and you can change this in your settings. If you see the word 2, it's really 200. If you see 10, this is really 1,000. If you see 126, this is actually 12,600. So all of this is slightly abbreviated, just a little heads on up. It's not like someone's actually only buying 2 shares of a stock that is $1. they're buying, again, 200 shares, or they're buying 1,000 shares, or they're buying 12,000 shares. So just a little heads up that right now this level 2 is slightly abbreviated. You can change that in whatever you want in your settings. Now, another thing that a lot of people always ask is, well, what does the colors mean? The colors right here, the color is yellow here, and the color is green right here, and the color is blue right here, and this is red. What does that mean? Does that change at all? So the colors is just for us. It's us as humans to get a better visual. And all the colors is showing is how many orders before a different price change. So what do we have right here, guys? We have every single person buying at 177. Then the change in the color is where the orders of 176 start. And then the change in that color is where a new order of 172 starts. And a change in that color is at 165. So what is the point of it? It's just helping us understand how many people are buying at a specific price before the next change in price. So why would this be important? This is important because a lot of traders like to see, is there the bid stacking? Are the bids stacking? Are the asks stacking? Which way is this play going to be heading towards? So let's see if we can find a little bit of I'm going to take a little bit of a screenshot here. And this is like, let's see if we can get a good little example. Example would be, right here, when we're taking a look at this, the level 2 is supposed to tell us which way is the stock going to be heading next. Now, let's just imagine here, traders, for a second. Let's imagine that there was only one buyer at 179, and let's say there are 10 sellers at the price of 180. Imagine if this was a fight. Imagine if this was a war, and there are one person versus 10 people. 99% of the time, who's going to win? Is the one person going to win, or is the 10 people going to win? Well, most likely the 10 people are going to win. It's very hard to win a fight when it's 1 versus 10. So the thing is, that's the same exact example over on NBY right here. If we see that there's only one person to buy at 179 and there's 10 people to sell at 180, most likely the stock's going to move down. Because that 179 is not going to be able to push away all those 180s. Most likely someone's going to jump on down, take that 179 order out, and now it's going to move on down to 178. And then maybe again, more people start selling at 178, and then it goes down to 177. And then at some point, we're going to be able to find some sort of opportunity where the stock might be able to break off. So what I like to do on a lot of these plays, I want to see if we can find something a little bit better here. Let's go over to AZTR here for a second. So this is how I use the level 2 a lot of times. And let's just go over to a decently hot play, AZTR. So this is how I would use it in real life. AZTR, what am I realizing? I realize that AZTR is going to have very strong 120 support. That's what I see. This is me doing research on the chart, right? AZTR, 120 is very strong support. I also see that AZTR has a downtrend. Now, I am now getting my game plan on how I want to be able to trade this play. I know AZTR, this was a stock earlier this morning that came out with news, right? We can go over, we say, hey, Deck, how did we find this play? Well, we use Foxrunner. Foxrunner shows us all the top gainers and top losers. We know AZTR did have a good credible press release this morning showing that has phase 1 and 2. Okay, great. Now it's on our watch list. Now, after it's on our watch list, we can see that 120's main support. We know that we have 143, 145 as our main resistance line. We have this downtrend. Now, after I find the stock, I start again doing my technical analysis, showing where should I buy this play. Great area to buy it here, great area to buy it here, great area to buy it here, great area to buy it here. I also know, again, we have great areas to sell. Great areas to seller short here, seller short here, seller short here, seller short here, and now seller short here. So what are these prices? This price right here is going to be right around 137, 138, okay? 137, 138. This price down here is going to be right between around that 120 mark, right? 120 area. Now, what do I think? What do I want to do here? So now I type in over on AZTR. AZTR, we know what? We have to think about it as a war. We have to think about it as a battle. We have to think about it as two different sides. We have, if we want to think about it as different wars, we have the North versus the South, right? The Revolutionary War. We have, the United States versus England, World War. You could say, again, we have whatever country versus whatever country. You can think about it in a million different ways, right? You can think about that movie 300. What was it? It was like the Romans versus the Immortals, that guys. Have you ever seen that movie? So the way that I always think about it in my head now is we have one side, okay? One side, let's say again, country B is the shorters. They are doing the best. If you are a shorter, what's your goal? You are trying your hardest to make the stock fade and fall, because you want to push them back. You want to take their land. You want to be able to grow as a country, as that army. What does the other army want to do? The other army, guess what they're trying to do? They're trying to push them and break on up this way. They're trying to push them back and take their land and take their profits and take everything that they got, right? So we got basically one side versus the other side. And now what? Well, we know the home base is right around 120 for the bottom, the blue country. We know again that the red country right here, their home base is right around 137. And basically at this moment, the battlefield is everything in between. So what I'm looking at right now at the level 2 is I'm asking myself, who's winning? Well, I know right now, again, home base is right around 120. Now I know, again, their home base, the red country, is going to be right around 137. So what am I looking for? I want to see, can AZTR maybe push through this 137 mark? Can we push the shorters on back? And if we can, that's a great sign of strength. So right now, I'm giving it to the blue country right now. They're currently winning. Why are they currently winning? Because again, 130 is holding up strong at this moment. Let's see if 130 can hold up strong. Right now, again, we're getting pushed back slightly. Let's see if the buyers, guys, can currently win, push back up to 130, try to get back up towards around that 137 mark. Right now, it's pretty equal, but we also have the shorters now slightly pushing them back. Shorters, guys, starting to move on in. Shorting country pushing back. Now, again, we actually have the buyers. The buyer countries on their heels getting pushed back towards, again, their home base. Now, guess what, guys? Near home base, we usually know, again, buyers are going to try to move on in. Are the shorters now taking over? The shorters are now taking over. They're trying to claim that territory right now. Buyers, this is where they got to hold on up. If they don't hold on up right here, we're going to start seeing a little bit of a dump. Buyers are fighting. They're trying to stay alive right at their support line. Shorters are a little bit in control right now, though. So who am I giving it to at this moment? Well, ladies and gentlemen, shorting country, sellers ask. They're currently in control at this moment. So who's in control right now? Would I want to buy in at this moment when I see all the shorters in control, when I see sellers in control, when I see, again, right now that we are currently losing if you're a buyer? All right, buyers better, again, hold this 120 mark. If 120 starts going, things could really start getting ugly very quickly. Buyers are doing their best, holding right around 120, 121. So again, buyers need to hold here, 120, 121, 121, trying to hold on up. We do have 120 still fighting a little bit. 120, 121 still holding the best it can. Shorters are pounding down. You're asking yourselves constantly, who's winning on this trade? Who's currently winning? See, just by doing this fun little example, this fun little game, I can say to myself, ooh, I don't know if I'd want to buy this play at this exact moment, because it seems like right now, shorters are currently winning. The buying army is looking a little bit weaker. The buying army is saying, hey guys, we may have to retreat here in a second. And if they retreat, guess what's going to happen? The stock's going to fade and fall back down to like 115 because they're losing their home base. Guess what? If another army invaded your home base and all of a sudden you're getting your butt kicked, people start running in the opposite direction. Guess what's happening right here? Guys, we were supposed to hold 120. Shorters are winning. If we start losing 118 right here, we only got 4 orders there. Now again, we're down to 116. Now 115. Retreat! Everyone run the opposite direction. So again, isn't that like a fun little way to just be able to understand now? Okay, the level 2 is telling us who's winning. The level 2 is telling us who's in control. The level 2 is telling us, oh wow, hey, maybe I shouldn't be a buyer right now, because that's giving us a good idea of maybe what is happening. You know, so the level 2 here, team, yes, I, again, number 1, find the hottest play. I do my research on what are our home bases, aka support and resistance. And then from there, once I trade the stock, I'm entering it and I'm watching it here. So it's a very kind of fun way that I always think about it. And again, you don't have to think about it in that manner, but that's how I think about every single stock trade I'm in. So I get to gauge an idea of who's currently winning and who has the momentum and who has the action. And that's where I'm going to be a more consistent and successful trader, by not jumping in on the wrong side, right? Not by putting myself in the wrong positions. So level 2 is absolutely splendid, absolutely great, and you guys can be able to make a lot of money by reading a level 2 correctly. It is all about the buyers and the sellers. Now, what else you guys can see is, again, the level 2 is also where you guys are going to be placing orders. So how would you, again, place an order over on a stock? Let's say you want to get involved over on stock NBY, or let's actually change out our scanners right now because the market is now open and live. So let's change out our scanners. Let's put on our normal scanners at this time. Let's see if there's any stock that's currently getting a lot of hype and momentum. And it's still right now, NBY is one of the top dogs. AZTR starting to get a little weaker. We don't have anything that's going too crazy just yet at this moment. We do have NVIDIA, though, coming on up. NVIDIA's earnings are tonight. So let's say, hypothetically, Deck, I want to get involved and I want to buy 10 NVIDIA shares for tonight. How would we do that? Well, the only way you can get filled is by using the level 2. You type in NVIDIA. And NVIDIA has lots of action. NVIDIA has lots of, volume going through it. Now, how would I do it? I would go 10 shares. I click 10 shares, you go to a market order, and guess what happens the moment you click buy? The moment you click buy, whatever is the best current selling price is the moment that you're filled at. So if you click market order buy, whatever is the best current asking price, that is the price that you're going to get filled at. Now, if you're saying, hey, Deck, I'm taking a look over on NVIDIA, I'm taking a look at the chart, I think you could fall on down towards the price of 178. Well, then guess what? You can go to a limit order, type in the price 178, go ahead, click buy, or not, excuse me, I shouldn't do let's go 178. There we go. We go ahead and click buy. And now guess what? Now this is a pending order. What does a pending order mean? It means it's live, it's there. And if the price comes down to 178, we need, again, the price to come down to 178. And once that happens, that's when I'm filled. So when you do a limit order, you are changing limit, picking the price you want. If you do a market order, you are going to be getting filled at whatever the asking price is. Same exact things for getting out. You jump in a play, you want to get out instantly. You click the sell button. Where are you getting out? You're getting out wherever people are willing to buy at. If you want to do a limit order and say, hey, Deck, I'm filled at 178. I want to get filled if it ever jumps back up towards 180. You type in 180, you click sell, you then have a pending order. So Deck, the level 2 right here shows us buyers, shows us sellers, shows us how much, shows us, of course, what price, and can give us an idea of who's currently in control. Absolutely. Now, what else does the level 2 do a great job with? The level 2 is also going to show me here, traders, the level 2 is going to show me how much volume a play has. A lot of people always ask me this question. They say, Deck, how do I know if a stock is even worth trading? Well, as a day trader, as someone who wants to be able to get in fast, quick plays, there is no magic number that people are like, oh, if it has over 10 million shares traded, it's going to be a great play. Oh, if it has over 20 million shares traded, it's a great play. No, that's not true at all. Because when you think about it, every single stock has a different average volume. It's about comparing the average volume to the current volume. Like, for instance, right? If we want to take a look over on NBY, for instance, right? Let's go over to Yahoo Finance. Let's click NBY and let's just see what we have here. NBY, there is no number where you're like, what's the good amount of volume to be able to see a stock go on a big time breakout? You go over here and you see NBY, its average volume is 3 million. That's going to be 10 times different than maybe another stock. But what you guys do realize is that there's 92 million shares traded today already out of the overall 3 million. So there's a massive increase in volume, and that's showing that this stock, at least at some point today, has been very hot. Now, we can also see this by typing in the play. Let's say you have a good gut feeling about TDTH. Deck, I really like TDTH today. I think this is going to be a great play that's going to make me a lot of money. Well, I'm going to type it in on the level 2, and the moment I type it in on level 2, I'm going to sit here. And I'm going to do this. What do we notice about TDTH? Nothing's moving. Nothing's happening. Guys, a stock that is not moving is a stock that will not make you any money. You will not be able to make any money whatsoever if a stock is not moving, if a stock is not spiking, if a stock is not climbing, if a stock is not ripping and running. You will make $0 on a stock that has 0 orders going through. So if you ever want to say, hey, Deck, I want to buy TDTH today for a day trade, you're making $0 today. There's no one else buying the play. So remember, what's the secret? The secret is we got to find the hot stock and be able to enter and exit over on this play maybe before everyone else finds the play. We want volume. We want action, but we want to try to beat the volume towards it. Now, that doesn't mean, again, buying it on TDTH and then sitting here and hoping, again, something great happens. That's most likely not going to be a great idea. What we most likely want to do is go over to plays that maybe have volume already if we're a little bit late to the game. So if you're like, hey, Deck, I want to look for a possible short over on AZTR. We type in AZTR, guess what? Look at AZTR. At least it's moving. There's activity. There's traders here. We have some sort of action over on AZTR. Volume equals activity. Activity equals profit. If we do not have activity, there will be no money to be made. So the level 2 is going to give us so much great information, shows us how active it is in a sense, shows us where people are buying, where people are selling, shows us, of course, which way currently has the momentum, if that's to the upside or the downside. The level 2 is the final stage of what I'm looking at. I find my play. I research my play, I use the level 2 to execute that trade, and that is what I'm consistently watching. Does that make sense to absolutely everyone? Hey, let's go on over to our next topic here. Our next topic that we are going to be diving into now is going to be shorting, going against the grain, going against these stocks, betting against these companies. One of my favorite ways to be able to trade stocks is going to be short selling. And that's all it is. Exactly what I already said is going to be going against these plays. A lot of people, when I say buying stocks in the stock market or investing into the stock market, you must realize that 99% of people think I'm saying, hey, let's buy a low stock and hopefully it goes on up. Now, I like to think about numbers. I like to think about odds. I like to think about statistics and facts and how can I become the best trader that I can be. Well, what I want you guys to think about is how many companies actually succeed. The answer is not many. We have the S&P 500. The S&P 500 is the top 500 companies in the United States. Those are the best of the best. But haven't I showed you over on FinViz and all these other places that there are over 10,000 companies that are registered in the stock market for you to be able to trade? So there's 500 great ones. Microsoft, Google, Nvidia, Tesla. These are all great companies. But what about the other 9,500 stocks out there? Sure, there's a mixed bag of some good ones, but the majority of stocks on the stock market, and I will say the majority of the stocks on the stock market suck. They're not good plays. They're not good stocks. These plays are actually going to come back on down, especially stocks that are sub $15. Everyone tries to always find for the gold mine. Let me buy some stock that's a penny right now and hopefully it turns into the next Tesla. Maybe it'll turn into the next Apple. Maybe it'll turn into the next big giant. And it definitely could. But at the same time, it is probably a 1 in 1,000 that you are actually going to find that play. So what do I turn to? If I said that the majority of stocks fade and fall, because that's the facts, the majority of businesses fade and lose business over time, they're going to collapse. The majority of businesses within the first 2 years, 85% of them will fail. That's not a number I'm making on up. That's from the Libra statistics. You guys can go ahead and type it over on Google. The majority of new businesses fail. So what is the stock market? Well, the stock market is a place that we can go ahead and invest into businesses, invest into companies. Well, I can also bet against the company that they aren't going to do well. And if I know that the majority of these companies are not going to do well, why would I again go ahead and buy them when I could just place the odds in my favor knowing that the majority of them are going to go ahead and start falling and fading and dropping? So I don't, again, even need to do any sort of research on this. Let's just go over to the top gainers of today. Let's just do the top gainers of today, and let's make it nice and fair. Let's go back to a weekly time frame, and let's start off at the very tippity top. NBY. Let's go all the way to the top. NBY 5 years ago, when it was first available, says it was at $1,500 per share. It's now at $1. Now, this company had something called reverse stock splits where they changed their price over and over and over again, trying to stay on the stock market and not getting delisted. So they were never actually at $1,500. They might have been at $100. They might have been at $200. But regardless, what has the stock and the chart done over the last 5 years? Fade and fall. Okay, well, Dak, that's one example. You're 100% correct. What about NAMI? NAMI has been available now for the past 1 year. NAMI. This stock has now gone from $6 down to $1. Okay, let's go to the next example. AZTR. AZTR has now gone from $1,000 to over the last 2 years to $1. Okay, how about INHD? INHD has gone from $100 to now $5. What about FLNT? FLNT has now gone from $50 to $2. Okay, let's go to BLNE. And again, all I'm doing is taking these off the top gainers of today. This is not a list I did a whole bunch of research on last night saying, hey, you know what is some examples that are going to make me look good. These are just whatever the top gainers are today that I know all of them are just built off that hype. BLNE went from $10 down to $1. STSS back in 2022 was at the price of, again, all fake reverse stock split numbers, $18,000. It's now down at $11. This stock probably went from, again, $200 down to $11, right? PTHL, don't even get me started. QVCGA, fading and falling. Just grabbing every single one of them. What do you guys realize? The majority of these plays, right? 9 out of 10 are going to turn into absolute dust, right? That's what they turn into. Absolute fairy dust. Poof, they're gone. Remember, again, you may be saying to yourself at some point, saying, oh, Deck, let me not sell my shares. Let me not take my loss. At some point, the stock has to move on up, right? At some point, my shares have to, again, grow. The answer is no, not at all. That's the complete wrong way of thinking. Not at all. If you think, again, the stock is going to go on up, you have another thing coming to you. Let's just go again. Just take a look over on NBY. Hey, it has to come back up at some point, doesn't it? Nope. No, it doesn't. Nope, not at all. Hey, that's a great way to think on Apple. That's a great way to think on Microsoft. That's a great way to think on NVIDIA. That, yes, these are great, credible companies. The top 500. They are the top 500. And guess what? I don't short the top 500 companies in the United States. I don't do that. I look for shorts against everything else. Stocks that are $15 and below, $20 and below, because these are struggling companies. Companies that are most likely not going to be able to thrive, most likely not going to be able to make that money. Again, placing the odds in my favor to be successful. That's all I'm doing at this time, right? So let's take a step back and think. We're trading the penny stock market. These are not reliable companies. 80% of them will go bankrupt in the next 2 years. Penny stocks run more from momentum than their financials. So every single day we see top gainers be from, again, sub $20 stocks. But that's because they come out with news and they get the hype on the day. Once the hype dies on off, the stock is pretty much done with. We see it happen all the time today in pop culture. Let's say, again, one song takes on off and an artist gets super hot, and then guess what happens? They just diminish. We have no idea where they are anymore. You're super hot for a month. Maybe, again, a certain word or a trend or a fashion style is super hot for, again, a month. And then, again, diminishes and poof, and it goes away. Same exact thing in the stock market. I might see a stock that says, hey, we have these positive drug results. I am buying that play today. Yes, I am. I am buying that stock today. Why? Because I know Marissa's going to buy it. And I know Vince is going to buy it. And I know Jerry's going to buy it. And I know if they all buy it, guess what? The stock's going to go on up. So I want to try to buy the stock as well and make it go on up. And everyone's buying it and make it go on up. But the moment it goes up too high and it starts fading and falling, poop. No one cares about it anymore. Sell your shares, dump it on off. So what I've realized over my last 10 years of stock trading is that the majority of stock traders, guess what? They get FOMO. They get emotional. They see everyone making money off the big time spike and the big time rip and run, and then they end up buying at the top. And I was doing that. Again, when I first started, I kept buying at the top over and over and over again. And I thought to myself, why is it every single time I buy a stock, it ends up fading and falling on me? Every single time I buy a stock, it starts dropping. Every single time I buy a stock, it seems like it goes in the opposite direction. So you know what? Let me just keep doing exactly what I'm doing. But let me just click the sell button first. Let me just click the short button. Let me, again, just go against it. Guess what started happening? I started making money. I started saying to myself, wow, okay, this is great. I'm buying these plays, at the very top I was losing. Let me just short them at the very top. And now guess what? Now I'm winning over and over and over again. Because when you read over on these press releases, oh, this company just came on out with late stage breaking pharmaceutical. A lot of them look like this. This is from the Wolf of Wall Street, Aerodyne Inc. You guys ever see that, part in the movie where Leo DiCaprio is saying, we have an upcoming brand new pharmaceutical company with late stage access to, again, some of the greatest billionaire, like whatever he's saying. It's all fake. It's all fugazi. It's all nothing, right? So you need to understand that the majority of these plays are going to go on very big rips and runs and then comes back on down. Now, I already told you, finding the number one top gainer on the day isn't tough, right? You have the right scanner, you get that answer every single day. But the thing is, every single day after these ones go on the big time rip and run, they give back all their gains. The answers are given to us every single morning on what is going to be the best short. Well, the best short is going to be whatever is the highest on up. Do you think it's reasonable in any sort of way that a stock would hold a 200% spike in a day? If Apple spiked up 200% in the day, what do you think every single person would do in the world? Sell their shares. traders. They would say, I'm up $20 million. I'm dumping my shares right now. Guess what? That's what insiders do. That's what the majority of people do. If you are in on, let's say, UONE, and the stock goes on this 400% spike, and you're saying, I've been holding this stock for 3 years, get me the heck out of here, goes on a massive rip and run, everyone dumps their shares, it comes back on down like nothing ever happened. We see this over and over and over and over again. A DPW. Spike on up, dump on off. Spike on up, dump on off. Spike on up, dump on off. Are these stocks ever actually going to hold their gains? The answer is no. They're not going to. So, this is why we want to turn your weakness into strength. We want you to understand that you could be able to consistently become a stock trader that is going to be extremely profitable by going against these plays. So the pros is it's easier to find a stock. It's easier to find a stock later than it is early. It takes time to be able to find the hottest press releases. It takes time to be able to jump in on these plays and be able to say, hey, you know what? This is the best play for this reason. I'm going to jump in and hope other people buy it. But once we see that every other person bought it, we already have our answer. Nearly all stocks are going to come crashing back on down. It's just as profitable on the downside as it is the upside. If a stock goes from $1 to $2 and you have 1,000 shares, that's $1,000. If a stock goes from $2 to $1, you have 1,000 shares, it's $1,000. It doesn't matter if you make it go up. It doesn't matter again if it goes on down. Guess what? You're making the same amount of money. Cons. Numbers do go up forever. Do not hold shorts overnight. So guys, the big issue with shorting that people always bring on up is they say, hey, if you short $1,000 at the price of $1, the lowest it can go is $0 and you lose your money, but that's it. Well, the thing is, people get nervous because they say numbers go up forever. So if you short $1,000, the stock goes up to $2, you lose your account, right? Same exact thing as you would if the stock went to $0. But what if it goes up to $3 or $4 or $5? Well, not anymore. And again, please check your broker and make sure that they are going to be doing this. But the majority of brokers are going to liquidate your account. But back in the day, they wouldn't liquidate your account and you would actually go into debt. So you would go from $1 to $2. Hey, I lost my $1,000. But then it would go from $2 to $3. Now you owe them $1,000. $3 to $4. Now you're down $2,000. So you lost your account plus owe people money. So that's why shorting at first would get a very bad rap. Now, what would happen? Now, your broker would liquidate you. Your broker would say, hey, you know what? You're doing bad. We don't even want to go through this. We're going to cut you out. And the majority of the time, and please check with your broker on this, if you lose more than 80% of your account, your broker would liquidate that trade, basically selling it for you, saying, hey, we're selling it for you. You might say, oh, no, I got to keep on holding. It's going to come back on down at any moment. They're going to say, we're not taking that risk. We're not allowing you to go into debt. We're going to liquidate your account for you. So that has happened to traders who've gotten squeezed where the stock keeps going higher and higher and higher. And again, you end up losing your account. There's pros about shorting, but there's also cons. So this is, a story that has happened to someone in the past. This was a while ago, back in 2015. Now, again, they do liquidate, your account so you aren't going into any sort of debt like that. Now, let's think about shorting strategies. How do we know when to short? Well, one of the easiest and best ways to know when to be able to short is by looking at those upper shadows. If you watched our previous lessons talking about our boot camp and candlesticks, we talked about when do stocks tell us when we're going to reverse? When we have upper shadows. Upper shadows, this is what we went over on the previous lesson, talking about a stock spiking on up, forming that high, reversing back on down. Upper shadows show weakness. It shows that a stock has hit its high of the day or hit a specific high. Buyers were not strong enough to keep it at that area. Weakness moved on in, which led to selling. Upper shadows are one of the best ways to know that a reversal is going to be coming on up. Here is an uptrend followed by an upper shadow that leads towards weakness. Here is an uptrend led by an upper shadow, which leads to weakness. Here is an uptrend leading towards an upper shadow, which leads towards weakness. Let's just take a look at today. Are there any upper shadows today that are telling us, hey, guess what? We might be at or near our high. Let's go back to a 2-minute time frame here. Ladies and gentlemen, first stock I click right here, WAI. Stock's going on a massive spike. We form our upper shadow. Ladies and gentlemen, guess what's happening? It's now time to reverse back on down, right? So these are great examples, and it's not going to be every single stock, but a lot of plays. When you do see that big top upper shadow here, you are now realizing you are at the top of a play. Now, it's not only that here, traders. You guys can also take out, larger time frames. Weekly charts or daily charts, where when an upper shadow forms, what happens the next week? Well, upper shadow, the next 4 weeks are red. Upper shadow, the next 4 weeks are red. Upper shadow, the next 3, 5, 6 weeks are red. So sometimes you can use it not only on a minute chart, but you can also use it over on a weekly or daily chart where you could be able to have a lot of success on that as well. It's almost like an easy cheat code, just saying, hey, this is the best play for this specific reason for this short. We know that that's going to be a current top and a current high. What's another great way to be able to short plays? By, again, shorting previous top gainers. I already told you that the majority of these penny stocks are not going to hold up their gains. Yes, sometimes we will see momentum continue to carry over into the next day, and we have seen back-to-back top gainers. But a lot of times, people are too greedy. If a brand new hot press release comes on out, people are going to flood over into the next play. The new stock is going to dump on down, and again, guess what? Everyone's going to abandon it, right? So we're looking for stocks that spiked over a 90 on the RSI. Remember the RSI from our indicator lesson. Look for stocks that have spiked more than 1, 2, 3 days in a row. The more it spikes, the higher it goes on up, the bigger the short it's going to be. Look for stocks that have a large overextended move. Stocks that have gone on a multi-day or multi-morning spike where it's up so high, it's tough for it to continue to move on up even higher. Shorting pre-market top gainers is one of the best ways to make money every single day. The stocks that have news on the day that are gapping on up usually do turn into the biggest losers. It's very simple, easy way to trade, 85% win rate. I will tell you guys this right now. I think that one of the biggest mistakes that a lot of new traders make is they wake up every day, they see what is the best top gainer in the market, and they say, that's the one I want to buy. Why do I want to buy it? Well, Deck, it's up 120%. Everyone's making money on this. Everyone's buying it. Yes, they already bought it. They already made money. It's already up 120%. I would not buy that. I would probably go against it and look to short it. No, I think I want to buy it. Stock comes crashing all the way back on down. So a lot of times, traders, we will see every single day, whatever is gapping up the highest usually turns into a red day right at the start. Oh, AZTR was our number one top gainer this morning. 150, it's now back down towards, again, 116. You guys know what I mean? I mean, DEVS, this is one of the top gainers of this morning. Guess what happens? Again, this is a red candle today now. You could see it's a very big drop now. Just because you have a big spike in pre-market doesn't mean it's going to keep on spiking. The majority of the time, if you have a big spike in pre-market, means that the stock is going to come crashing all the way back on down, right? So again, even look at this right here. INHD, upper shadow, reversal. Upper shadow, reversal. Guess what's happening? Stock is starting to spike its way back on up right now. We'd want to wait for a new upper shadow and then a reversal. This one didn't really have that big of a gap up this morning. You could see this one didn't really have any gap up whatsoever, but you can see the stock is now trying to work itself on up. Old spiking high is up towards around 630, aka this old upper shadow. That could be an area for a new reversal. It's about combining different ideas. Pre-market top gainers, previous top gainers. We're looking for candlesticks and upper shadows, giving ourselves the best chance of success. We know that the majority of these plays are going to fade and fall and drop. We know, again, the odds are going to be in our favor, and that is when we are going to be able to make the most amount of money. So what strategies are you guys seeing right here? Yes, I see the same thing you are seeing. Upper shadows, stock fade and fall. But also this, large gap up. Stock came crashing on down. Also, again, if you shorted it the next day, look how much fading this is. So, I mean, these are normal charts saying, hey, Deck, ANPC right here went on a great spike, upper shadow, faded and fallen. Well, Deck, I see that the stock has a massive gap up. Must have had some good news. Then again, came crashing back on down. Well, Deck, I see that every single time it has that big spike and that big gap up, the next few weeks are all red. Shorting, again, upper shadow, shorting previous top gainers and shorting pre-market top gainers, all great chances of success. Upper shadow, big gap up. Look at the big crash that we have from that. Awesome. Look at this. Upper shadows, big gap up, crashing, multi-day crashing. We see it happen over and over and over again. So what else can we do for shorting? Well, we can also short on trendline cracks. For the most consistent climber, the number one top gainer, place a trend line on the morning. Look for a reversal from the bullish side to the bearish side. Remember on our previous lesson, we were talking about trend lines, bullish side, previous side. We talked about it when we referred to breaking the ice. When you break the ice, eventually you bounce on it, you bounce on it, you bounce on it, you're going underneath. So the more you bounce on that area of ice, the better chance you have of cracking it. We know anything on the top side is considered bullish. Anything on the bottom side is considered bearish. The longer you hold, the more times that you bounce on that trend line, the bigger the crack is going to be. So we are shifting. We are having that psychological paradigm shift from we are now a bullish play to now we're a bearish play. And this is going to give us a lot of easy predictability on when we should be able to move on from this play. One of the best things that we could see every single morning as well is when we have no news whatsoever. People start making things on up, right? We hear this all the time. Traders, all the time. You could say, why is this stock gone up? You go over to Twitter, you go to X, you go to StockTwits, you go to Discord, you go to over anywhere. People just start making things on up. Oh, it's up because this guy did this because of that. Oh, really? Yeah, I heard he did this. It starts moving up even higher and higher and higher. The rumors start getting more extreme. Guess what? Eventually, none of it's true. Comes crashing back on down. Without actual any sort of credibility, all these plays just fade and fall and drop eventually. So what's the biggest fear as a shorter? Because what I've taught you so far sounds so great, so easy. Why don't we all just become millionaires? Because there is the fact that stocks do go up higher than what we think. And that's, again, being short squeezed. Now, what's a short squeeze? A short squeeze is when there are a lot of shorters in on a play. And guess what happens? The stock spikes up even higher. Very easy way to think about this. When I buy a stock, it slightly moves up. Now, if I buy a stock and Vincent buys a stock, it slightly moves up a little bit more. Now, I buy it, Vincent buys it, Maria buys it, Shannon buys it, and Jerry buys it. We all buy the stock at the same time. Guess what happens? It slightly moves on up even more. Now, let's reverse that. Let's imagine we all sell our shares at the same time. The stock goes back on down. Now, shorting is opposite. I am selling it first. I'm shorting it first. And then to get out of the play, I need to buy back those shares. So if our entire group shorts it at the same time to start, the stock moves on down. But if we all get out of it at the same time, guess what happens? The stock moves on up. So it's opposite of what I just said. Now, let's think about this. Let's imagine there's a stock that every single person is shorting. Every single person is saying, yeah, this stock's a dud. It's going to fade and fall. We all know this. It's not a good company, yada, yada, yada. Well, if all of a sudden buying volume starts moving on in on this play, the stock could start working itself back on up just because people are scared and getting out of their shorts. So if I get out of my short, the stock moves on up. Vincent gets out of short, moves on up. Now again, that makes Anna Marie, she's getting scared. She's getting out of the play. It moves on up. Now again, we have Terry and Tyler and Toomey, if Toomey's a name. And then that starts moving on up. And it basically leads to an effect that the stock is now spiking, not even from people technically buying it, but just people getting out of their play. Right? So sometimes when a stock dumps, the stock dumps because people are shorting it, but it's also dumping because people are selling it. A stock might spike, not because people are even buying it, but people are scared and getting out of their shorts. Sure, short squeeze, the best example ever is going to be over on GameStop, where we have seen GameStop go on that massive rip and run because all the retail traders in the world said, let's all buy GameStop at the same exact time. And as they all bought GameStop, these hedge funds said, we are shorting. We're going against GameStop. We have to get out of our position. And guess what? They got out not just a few shares, millions of shares. And as they got out millions of shares, that's what led to GameStop start going on a very big rip and run. So you guys do have to be able to always be aware of that to be able to say, hey, if I am in a short squeeze, I have to get out because you cannot get caught up in something like this, right? And there was something like that. And we also had an earlier one in, what was that, 2023, 2022? The big GameStop one. You know, this was a massive short squeeze. That was back in 2021. Where we went all the way from, this also had a stock split. This was $50 all the way up to $550. Right here, it shows we went from $4 up to $120, but it was really more like $50 to $550. It was one of my biggest trades ever. I did not short it. I actually jumped in on this play with 1,000 shares at the price of $52, and then Elon Musk tweeted GameStop. Stock ran all the way on up to $74, $75. I was able to make, I got out a little early. I did. I got out a little bit early. I was able to make like $14,000, $15,000. It was awesome because I did it all within, again, like 30 minutes. I jumped in right at the end of the day. Elon Musk tweeted GameStop. Thing went crazy. I got out. If I kept holding overnight, I could have made $100,000, $200,000, $300,000. So, I missed out on a big bag, but at the same time, can you really be that upset when you make a few over $10,000 in, less than 15 minutes? But, that's basically what happened over on that GameStop, short squeeze. And that's the most popular out there in the entire world. So, absolutely great. Absolutely awesome. Really cool stuff. Now, let's move on to the next topic here, traders. Next topic that we have to go over is going to be filings. We know there's a lot of news. We know there's a lot of hype. Let me shut my door real quick. There's a lot of news. There's a lot of hype. But at the same time, guys, there are filings that you guys have to be aware of. So first things first is, what is a filing? Well, a filing is a U.S. government that gives investors the ability of a company's history and progress. We have to, as investors, be able to understand what our company that we're investing is doing. Imagine if we just gave $1,000, $10,000, $100,000 to a company and we never heard from that company. Right? So it is by law that these companies are reporting these filings, these quarterly filings, these updated filings, so that we as investors can see what our money is doing and where it's going and what is happening inside that company, so that we can make the best overall educated guess and investments. The SEC is a financial statement or other formal document submitted to the U.S. Securities Stock Exchange Commission. Public companies, certain insiders and brokers and deals required to regular SEC filings. So what is the SEC? The SEC is essentially the police of the stock market. So you guys probably have heard of the SEC before, investigating certain companies or going and looking into certain companies if there is any sort of fraudulent activity. So the SEC requires by law that every single company out there releases certain filings so us as investors know what's going on. Okay? So what are those certain filings? First one, just going to kind of list them off right here. We have the 10K report. The 10K report provides investors with a comprehensive analysis of the company. It's similar to a prospectus and contains more information than an annual report. For instance, financial statements are more detailed. Companies must submit this lengthy annual filing within 90 days of their end of their fiscal year. So basically here, traders, when we have a 10K report, we are getting an annual report card. We are getting a report card of the entire fiscal year, what the company has done, how's its revenue, how's its guidance. Imagine getting a quarterly report, like a revenue, getting a report card, but instead it's how we did throughout the entire year. So a lot of investors like to read this. They like to see a 10K report and they want to see the progress that you have made over the last 12 months. Now, if we have a 10K, right, standing for annual, we're also going to have a 10Q, and that's going to be quarterly. Now, take a guess. If it's 12 months in a year, what is that broken down into quarters? Well, we have 4 quarters in a year. That's going to be every 3 months. Every 3 months, the company has to come out with a brand new report card teaching us, hey, what's going on inside your company? What are you currently working on? What's happening right now? Just like tonight, NVIDIA has its earnings report for this quarter. We want to see over the last 3 months, how have you been doing? Have you been growing? Are you making partnerships? Are you making money? Are you losing money? What is happening here? After that, we have an 8K report. An 8K report are going to be major developments that the investors should know that are described in the 10K or 10Q, but they're developments that don't make the 2 filings in time. So let's say, I always like to think about it as an 8K is going to be a press release in a filing format. If there is something that has just happened, something that is important, something that investors should know about right now, it's going to be put out in an 8K filing. 8K filing is going to be the filing for a certain press release. We might have, hey, we have positive phase 3 data, or we have an agreement, or we just made a partnership, or we have a new CEO, or we have whatever. It could come out that specific day on an 8K report, not wait until the 10K at the end of the year, or not wait for a few months for a 10Q. We have forms 3, 4, and 5. Forms 3, 4, and 5 are going to show us ownership inside of a company. I'm going to help you guys on out right here. The best one that you guys want to be looking for is going to be the Form 4. Form 4 identifies as the change in ownership. What does that mean? That means insider buying and selling. So when we are looking at a Form 4, we are going to be seeing who inside the company is going to be buying and who inside the company is going to be selling. We also have a Schedule 13D. 13D filings, or we will also have 13G filings, are going to be filings when some company, some person, some entity, some LLC is buying more than 5% of the public shares available. So when there are more than 5% of the public shares available bought on up, we will then be seeing a 13D filing. Let's go ahead and check out some filings here, traders. So let's go over to Fox Runner here. We can actually go over to a few different things. We can go over to our filing section, right, and be able to see, oh wow, Form 4 right here. So there's a Form 4, there's a Form 4, there's a 6K, there's a Form 4. But let's just see what like a Form 4 looks like, okay? Form 4, we want to go ahead and check this on out. This is what we have. Form 4 filing. This is saying Daniel A. Ontario, right? He's working for this company, right? Sometimes it'll say he's the CEO or he's whatever. He is doing what? He is acquiring. If there's an A right here, he is acquiring. He's acquiring what? 549 shares, which is going to be what, $56,000 at the price of $3 here. Or he's acquiring 549 shares right here, and at the price of $3.01. So we can actually see this, what he's doing, where he's doing it on his common stock. Now, what is the point of that, traders? Like, why is this important? Well, it's going to give investors that nice edge, okay? And what do I mean by that edge? Well, if we see that a CEO is buying hundreds of thousands of shares. Well, ladies and gentlemen, that's going to be very important to us, isn't it? If we see that that the CEO is buying hundreds of thousands of shares, maybe he knows something that we don't. If the CEO is selling hundreds of thousands of shares, that might make us as investors a little bit scared. It might make us as investors a little bit worried. It might make us as investors say, well, what's going on here? So basically right here, traders, what can we see? We can see that we have a little description here. You guys can click the insiders page over on FoxRunner, and you can get a good idea of what's happening here. So we can see who's buying, who's selling, whatever company that we want. So let's just type in, let's go with NVIDIA here. If we want to type in NVIDIA, we can see at this time that we do have Jensen Huang, who is the president. Guess what, team? He's selling shares. He's selling 11,883 shares. NVIDIA right here, 8/14. Guys, let's just make sure we see this date correctly. This is this year, 8/14/2025. Why are we seeing this man right here selling so many shares throughout 2025? 2025, this guy is dumping shares at this moment. That's a little bit crazy. Well, a lot of people say, well, he's selling his shares for tax reasons. Selling his shares, taking the money, paying off taxes. That's part of it. Okay, I can definitely understand that. But at the same time, maybe he's selling it when we have earnings coming on up tonight. Could that be a little bit scary? I mean, these are all trades. When was the last time that, anyone, the CEO was buying shares? Anyone was buying shares within NVIDIA. Do we have anything like that? We have Jones Harvey C buying shares, 1,700 shares, Hudson DE buying shares. But we can also click again right here, 4 and 4. 4 and 4. Type in NVIDIA if we want to. 4 and 4. Type in NVIDIA. This came out Friday, August 8th, right? Check this on out. What do we have? Jensen Huang. Guess what we have right here? We have him disposing, acquiring, but we also have disposing shares. This man is dumping how many shares worth? $176,000 worth, $177,000 worth, $178,000 worth, $179,000 worth. Look how many shares this man is dumping. So is it for tax reasons, or is it because maybe they're not going to have a good earnings coming on up? Who knows? But it's good information to at least be aware of at this time, because we do have a big earnings report right around the corner, and this could help us maybe get an idea of what we want to be looking at next. Let's keep going to the next thing. Next thing that we have, traders, want to continue on with this, is I want to go over different sort of stock splits. We have stock splits and we have reverse stock splits. So remember when I was talking about before, showing these companies, and some of these companies were at like $1,000, $2,000, $3,000. Now, when we have these reverse stock splits, what does that mean? Well, a reverse stock split is a type of corporation action which consolidates the number of existing shares into a fewer amount. So what we have here, team, is we are going to change the price by eliminating shares. Let's think about it in a very easy example. Let's imagine that we were a company and we had 100 shares available to the public. Okay, so there's 100 shares out there in the world that you can buy, that you can be part owner of our company. Now, let's say our company is fading and falling and dropping and things are getting ugly. What we can do is say, guys, we're going to take away 50 shares. If we take away 50 shares, that will make our current 50 more valuable. It doesn't change the company at all. It doesn't change the evaluation of the company. If the company is worth, with 100 shares, $1,000, and now again, what do we have right here? The stock is fading and falling and dropping, and now the price of the stock, let's say, is all the way back on down to $5. We can get rid of shares, right? We can get rid of shares, and now these shares are going to be a little bit more valuable because there's less shares, which means we are no longer a $5 stock. We are going to move on up because those shares are now more valuable. It's now double. So now maybe it's a $10 per share stock, but the company's valuation is still exactly the same. So when you take away shares from the public, you're going to change your stock's price, but the company's value doesn't change in any sort of way. So why is this important? Why is this something that you want to be aware of? Because sometimes you might look at the past and you see a stock was at $2,000, a stock was at $1,500. These stocks were not at those prices. The stock is just changing its price to try to appeal more to investors. Now, why is this very important though? Because when you take away shares, you are now going to be taking away the float. And as you take and make your float lower, what have we learned about float? Is that going to lead towards bigger spikes and bigger rips in the future? So the more times you have a reverse stock split, the more you take away shares, the lower your float's going to be, the shares available to the public, which means that stock can now go on very big spikes and rips and runs. So a lot of times, guys, if you ever see a stock come out with a reverse stock split, it's now a lower float play. And usually the first press release a stock comes out with after having a reverse stock split leads to a very big rip and run. Okay, so wait for the next press release. This gives traders a reason to buy. And now this is the first time that it has a low float. We usually see buying volume going crazy over on these type of plays. As always, again, the stock's not going to hold on up. The stock's going to go on a quick little spike and come right back on down. But it's just a little cheat sheet and saying, wow, this is a play. That's the first time reverse stock split. Let's see what's going to happen. Just like we had right here, CEI had a reverse stock split, came out with a press release, stock went on a crazy rip and run. We can actually see again right over here, CTRM. CTRM had a reverse stock split. Stock went on a crazy rip and run. We could see again JAGX came out with a reverse stock split. Stock went on a crazy rip and run. PSTV went on a reverse stock split. Stock went on this crazy rip and run. So we are seeing a lot of hype and a lot of action after stocks go on their reverse stock splits. It's another, again, thing that I just want you guys to be aware of so that you guys are learning and growing and becoming better every single day.